Hey everybody, it's Alex here, aka YaBonks, and on today's episode of the YaBonks Show, I have a very special guest with me today, my good friend Phithe from Pyreswap, and we're doing an AMA interview about Pyreswap. Now, you might recognize Phithe from an AMA we did a year and a half ago, and he is the leader of the Seigniorage Circus community. It's a DeFi community in Discord. You might recognize the name. And he has come up with a revolutionary new DEX or automated market maker called Pyreswap. And it has GameFi elements, and it's revolutionizing the way that DEXs are done. And there's so much involved here. And as you guys know, I love DEX launches, especially when they come from people I trust, because for me, at least, it's one of my easiest money strategies, okay? And we're going to break down all the strategies here. This is unlike any other DEX you've ever heard of. This is groundbreaking, revolutionary stuff. This guy, kind of a mastermind in DeFi. Now, Phithe, do you want to say hi to the audience and introduce yourself?
Absolutely. My name is Phithe. I am the founder of Pyreswap, and I'm the best economist in DeFi, hands down.
Boom! All right, you heard it here first. Phithe is the best DeFi economist, hands down. And Phithe, for those who don't know what Pyreswap is yet, do you want to give a high-level overview or an elevator pitch about Pyreswap?
Absolutely. Pyreswap is a Gamified DEX and AMM superficially. And officially, it is in fact the world's first decentralized credit union. Pyreswap's roadmap has 6 phases. Its first phase has 6 different ways for its user base to make money, including its genesis. Our genesis event is launching June 15th, 2024.
All right, and that's actually my next question is, do you have any important dates or announcements that you want to let everybody know of that's important right now?
100%. Again, the Genesis starts June 15th, and it will go for 90 days. It will, in fact, have the most aggressive emission schedule ever before deployed in Web3.
Awesome. And Genesis events, for those who don't know, are exciting events, and there's the potential to make a lot of money in a Genesis event, especially if it's with a team and project that is trustworthy, okay? Now, I've covered Genesis events in the past on my channel, but for those who don't know what a Genesis event is, Phithe, do you want to give like a quick synopsis?
Absolutely. So a Genesis event is a liquidity Genesis event, and it is the way that a DeFi project or any project really effectively establishes its initial liquidity using incentives for people to effectively farm while they're deploying liquidity. Basically, this allows people to get a bonus on top of the swap fees they would be getting from being a regular liquidity provider.
Awesome. So that's a great overview of what a Genesis event is. It's a way to basically bootstrap liquidity for a new project, and it has very heavy incentives to bring users and liquidity to the project. So oftentimes the rewards are quite lucrative in a Genesis event. And this one lasts for 90 days and it starts on, you said, June 15th, right?
June 15th, correct.
Awesome. Okay.
On 3 chains at the same time.
What chains are those?
Phantom Opera, Avalanche C-Chain, and BNB Smart Chain.
Okay, great. So Phantom, Avalanche, and BSC or BNB Smart Chain. Good to know. Now, I always got to ask this right up front. What's in it for me, man? How do I make money here? I know you just mentioned the Genesis event, so I can make money in a Genesis event. How else can I make money in Pyreswap?
What a great question. So there's actually 6 different ways just in the first phase of the roadmap. And a lot of these ways are, in fact, token utilities, and there are new inventions, which kind of makes Pyreswap an evolutionary milestone in DeFi. So the most, I think, iconic part of Pyreswap's value to its user base is something called active staking. And active staking generally refers to staking that you wouldn't do long term. And what I mean by that is you're not ever going to go to sleep with an active stake position unless you want, well, let's put it this way. It would be much more lucrative if you kept an eye on it. Let's put it that way. Okay. So active staking is a differentiation from passive staking, and active staking allows users to quickly capture high yields and effectively turn them into their own profit for their own safekeeping. This is done through a gamification of the swap fees on the DEX. And it is, in fact, the first negative yield instrument ever seen in DeFi, possibly all of finance.
Okay, so another way to make money here is active staking.
Yep.
And we'll break that down. It's coming up. We'll break that down. How else can we make money here?
Great question. So you also have fundamental analysis being brought into Web3 through this mechanism. So active staking is a system that incentivizes a lot of transaction volume and a lot of activity clustered in small windows of time. And because these windows of time are governed by an epoch system that cycles every 6 hours, the price chart actually displays a 6-hour pattern in its behavior. And this pattern effectively, it allows this project to be so sustainable that red candles cannot kill it. Let's start with that. So red candles cannot kill this project, and they cannot kill any token associated with this project. This project also has over 30 tokens associated with it too, which is arguably, that's definitely a never before seen in Web3.
Yeah.
And this project is economically robust enough that it has its own crypto market inside the crypto market. That's what I tell people. And fundamental analysis is not something that's really seen in Web3, in my opinion. I think that you see a lot of TA, a lot of pattern seeking, a lot of pattern believing, but in, I guess, real markets, fundamental analysis is kind of seen as the more senior discipline. And I think that with us bringing this to Web3, we're kind of helping Web3 and the crypto market mature, if that makes sense. Because I think with fundamental analysis, this offers a lot of trading opportunities that are kind of more consistent and more reliable, still incredibly lucrative because you can leverage these as well. And that, I think that's never before been seen before in Web3.
Okay, so the next way we can make money is speculating using fundamental analysis in DeFi, and you're building tools for that in your ecosystem of over 30 tokens here. All right. 100%. Now you said there are 6 ways that we could potentially make money here. So what's another one?
Okay, so another one is Seigniorage, actually, because the tokens, like I said, 30 tokens, we actually have several Seigniorage applications that are incorporated into the greater ecosystem of Pyreswap. We call this the greater Pyreswap ecosystem, and it is effectively a network of dApps that work complementarily so that their tokenomics are kind of part of the same life cycle. And what this does is it actually resurrects projects that were previously abandoned. On the finance side, it's more like we're reclassifying the debt and allowing it to be discharged as kind of like bankruptcy. But we call that Meeding in Pyreswap. And Meeding can be profitable for the end user too. So Meeding also has windows of opportunity that a user can actually meet a Triage, meaning they're allowed to they can actually capture profit just from taking a token associated with a Seigniorage application, burning it to mint a token associated with Pyreswap, and then selling that token immediately for the tokens that they started off with. And they can actually capture profits pretty regularly with this strategy. Meeding also allows the users to effectively create demand for other tokens outside of our DEX. Yeah, which is actually, so Meeding allows a lot of tokens to go up in price at the same time.
Okay, so, and Meeding is a custom term that you guys came up with.
Yes.
I kind of want to share just a picture here of your website so people get the gist of the aesthetic here. You've got this like cool kind of lo-fi medieval aesthetic going on.
Yeah.
So when you hear so when you've got terms like Meeding or Incantation and the Incantation, WitchVault, and all this stuff you're going to hear coming up, this is where the terms come from, and it's really a cool ecosystem, even just aesthetically speaking. It's got a great vibe to it. I really like it. And so Meeding, MEED, it's a term, mead, and that's like beer or like ale or something, right?
Yeah. So it's that one's actually spelled with an A, but the word mead, I had to pick it, and it is an old English type of word, but it means like compensation. It means like getting recompensed. And I had to invent this term because this term did not exist. And I'm like, okay, I need to use a new word in Web3 because a lot of Web3, the vocabulary is being invented every week, right? So you'll see that the title on this page is Meet and Convert Tokens. So from a regular finance perspective, what we actually have is we have a convertibility option packed into tokens like 2Ohm, 3Ohm, and Z-Ohm. We have built that option inside those 3 tokens. So because that option's in there, whenever this option is profitable, meaning in the money, the price chart of 2Ohm, 3Ohm, and Z-Ohm, they will now behave like an option, meaning they will rise in price when the option is in the money, for those people who know what that means. But we have to call it mead because if I said convertibility option, I realized nobody would understand what I was talking about. By the way, the reason it's fantasy fiction was not done on purpose. That kind of came after the fact. Yeah. So the reason we call it the WitchVault is because it burns at the stake. That's the whole joke right there. Does that make sense? The joke about witches, right? You burn at the stake. You get what I'm saying?
I gotcha.
And so it's like, okay, so we can actually just call the users of the WitchVault witches. And the reason we created this fantasy fiction is because, believe it or not, this allows the debt of a tomb fork of a Seigniorage protocol to actually be discharged and managed. And therefore, I realized that the best group to kind of put into the ecosystem as well would be Knights. That's actually named after the Knights Templar, who were the original bankers. So like the witches are named after this, and the Knights are named after that. And the only place where you could put witches and Knights like in the same planet would be if you create this fantasy fiction world. But it kind of came as an afterthought. However, everybody really likes the aesthetic, so we're not changing that. We're going to lean into that. I learned that you have to that storytelling is the best way to teach people. So I think that the fantasy fiction helps a lot by being able to teach how this decentralized credit union works through the power of storytelling. If that makes sense.
Absolutely. Storytelling is so important, especially when you are basically giving a dissertation on highly advanced economic theories and concepts that most people, even folks like me who are knee deep in this stuff day in and day out for years, hardly ever hear. Or like you hear a little bit when you're researching things like Seigniorage and different kind of algorithmic stable coins and techniques like that, and tomb forks, which are Seigniorage protocols, and how these different economic systems work, much like our own monetary system that we are in, a Seigniorage circus, if you will. Sorry to steal a name for of your community for a pun there, but that's basically it's a clown show, and that's why we're in DeFi and crypto, right? Like,
it's a good name.
It is. So okay, let me rewind so we can keep on our train of thought here. So you're saying I can make money in the Genesis event that's coming in just 2 days on the 15th. I can make money speculating on the fundamental analysis of the different tokens here in this ecosystem. And you've got all sorts of tools and data for that. Professor Phithe's Elastic Supply dashboard.
Like that? Yeah.
I love it. And then the other way you said is meeting or meadatrage, which is combining mead and arbitrage.
Correct.
So compensation and arbitrage. So meadatrage, in old English made up terminology. This is great. And basically you're allowing people to take their old Seigniorage tokens from these gigantic ecosystems like 2Ohm, 3Ohm, Z-Ohm. If you guys remember that in like 2022, these were massive. I'm talking like
500 million market cap, I think.
Yeah, these were massive. I know people who made hundreds of thousands of dollars. I know somebody who made over $1 million in these. I know a couple people actually who became millionaires from these protocols, and there are a lot of like people that still are hanging on to the hope, right? And especially in the last 6 or 8 months, the price of some of these tokens have 10x'd.
Yep.
And,
everything's between like 12x and 24x actually. Yeah. Yeah.
So there's a lot of interest in these tokens again.
Yep. And there's more room too, because we're not yet nearly there. So like I think there's another quite a bit to go.
I love it. So another way to potentially make money is Meeding, where basically you're swapping your 2 ohm, your 3 ohm, your Z ohm, which is causing more buy pressure on these tokens, supporting those communities, bringing those communities into Pyreswap ecosystem, and then they can basically play the tokenomics here in a way that they could potentially yield a profit. And then also they can speculate on the price action that this will affect on those tokens too, if they are still holding some.
Yep.
And then how else? So we've talked about Meeding. How else can we make money here?
Okay, so we also can be a liquidity provider. And that doesn't sound like it's that exciting because any DEX can do that, right? But the difference with Pyreswap is that we have this concept of Vibratory. So Vibratory is basically a liquidity pair that is kind of tokenomically programmed to kind of hover around each other and seek each other in price. Does that make sense? Mm-hmm. So with liquidity provision, there is this I guess you could say this boogeyman known as impermanent loss throughout Web3 and DeFi. And impermanent loss is a real thing that can happen if the 2 tokens that you're providing liquidity for diverge in price. If there's like a large divergence, it's actually called divergence loss in other writing. If there's a large divergence, it is possible that this is not the ideal position for you to take. The concept of that is actually a lot more complicated than most people write about it, but I'm not going to make it the concept of this. But a vibratile liquidity pair is not really going to see more than like 2% of what would be called impermanent loss, or what I call cross lambda loss. But yeah, so impermanent loss is very, very mitigated. And at the same time, these pairs get a lot of volume. They are programmed to get a lot of volume because they are harmonic with each other inside this ecosystem. So that's another way, another facet of actually making money in Pyreswaps, and that's just phase 1. And I think the last one is Seigniorage, which is like option 6. And Seigniorage happens when these tune forks, like 2 ohm, get to peg and print. Okay. Technically, that doesn't happen directly on the Pyreswap app. That happens on the 2 ohm finance app, but it's within the GPSC, also known as the greater Pyreswap ecosystem.
I see. And I pulled up, you've got great charts and documentation, by the way. So I know we're throwing a lot of stuff at you real quick. You can obviously see how many different ways there are to play this new ecosystem. This is a very technologically advanced experimental DEX. Okay, so do your research here and learn as much about this stuff as you can. So that way, as you're playing basically against other people in DeFi, like we always are, you can gain an advantage through knowledge and experience and things like that.
And we've been beta testing this since early February with like less than 50 users, but every single thing works. Like you just see it, and the thing is designed for scale. So with Genesis, we will achieve scale.
Amazing, and this chart shows the 6 methods we're talking about. We talked about Genesis, fundamental analysis. We talked about Meeding. We talked about liquidity providing. Now, if you guys watch the YaBonks show, I'm always talking about how I make a lot of money as a liquidity provider. It's one of my favorite ways to make real yield out here without getting, one pulled over on me by a rug pull. If I find a DEX that I trust, that has a good reputation with a team that I know and trust, I will sink a few $1,000s into liquidity pools and let my tokens go to work. I usually use blue chip tokens like Ether or Bitcoin. There are so many different good blue chips that I trust, BNB. And I just stake them in liquidity. I just make a liquidity pair and just let them go to work for me. And then every month, I make in each pool maybe a couple $100 here in this pool, a couple $100 in this pool, and then it's real passive income. I like to spread them out, so I diversify and I lower my risk exposure to any single pool I'm in, or even any single DEX or chain or asset. So diversification is very important. Don't go all in on anything, guys. All right, and not financial advice, but liquidity providing, as you guys know, is my favorite way to make money out here. It's just super consistent and straightforward once you understand it.
Mm-hmm.
And you have that here. And this is a new DEX launch, guys. So as I'm always saying, new DEX launch with people we know and trust. As a liquidity provider, generally a great opportunity, in my opinion. Do the research, though, because this is different than any other DEX you've ever seen. And but I do believe you will have blue chip pairs as well. Is that right?
We do, yeah. And on all three chains, we call it the arbitrage trio. It's Bitcoin, Ethereum, and whatever the gas token is on that chain, effectively. Yeah.
Awesome.
So basically, those three. And I think it's great that you're that you promote liquidity provision, because it is still one of the most misunderstood things ever. Phase 2 of Pyreswap, we will be designing this proprietary liquidity dashboard specifically for managing those passive positions, because I've been looking around at other DEXs and they don't do a really good job at kind of explaining how that vehicle works.
Yeah.
And to be honest, they don't. The LP token itself is not understood to be a multi-asset derivative. In real finance, it will be called a multi-asset derivative, but it's not interpreted like that in Web3, which is this gigantic blind spot. Again, this is a very sophisticated DEX, and we're definitely kind of very interested in, I guess, engendering a really high literacy around the LP instrument in crypto. Yeah, that is a goal of mine, and we will be creating LP derivatives too later on.
Very cool. Out here we just call them LP tokens, man.
Yep.
Multi-asset derivative. I love it. It's very highfalutin, and I love it.
Yes, it is.
All right, so liquidity providing, my favorite, right off the bat, because I understand it, I do it, and it's just a money printer for me. Well, how else can we make money out here?
Well, let's see. We've gone through Meeding and Meeding. We've gone through the Velvet Rope pattern, right? We've gone through Genesis, right? We talk about Genesis. The Incantation. So what the Incantation is the swap fees from the DEX. Now, the DEX has an epoch system. So this is a non-boring DEX. It's designed to be a DEX that isn't boring. You talked about how DEXs are great because of the ability that they have passive income vehicles, and I agree. But most of the time, when I see a DEX get launched, it is what I consider a Walmart DEX. Does that make sense? They're just trying to be you get what I'm saying? They don't really specialize. And I like to think of Pyreswap as a specialty DEX. Does that make sense? We're not trying to compete with the other Walmart DEXs on these chains. Does that make sense? We are very unique in the way that our tokenomics work, and the fact that we have our crypto market within the crypto market. We don't need to really think about competing with the Walmart DEXs out there. And generally, it's also a DEX that isn't boring, because other DEXs, I think they just focus on being as Walmart as possible. And then it's should we lower our fees? And it's that's what we did 2 months ago and nobody cared, because, right. And I mean, so they just keep, anyways, the point of it is this is a DEX that's not boring, and red candlesticks cannot kill it. Does that make sense? So all of our tokens, they use the gas token on the chain that it's deployed on as its numeraire. And what I mean by that is that we don't use the dollar as the reference for our utility values. I think most tokens, when they're deployed, they'll be deployed against the gas token of liquidity, or they'll be deployed against a stable coin. Does that make sense? But everything about that token's performance is still using the dollar as its metric. So when Pyreswap was in designs, we wanted to make this the best app for crypto winter. We wanted to make it like the best app for crypto winter. We actually, were meant to launch a long time ago, but, we finally got here. It's closer to crypto summer now. But when crypto summer is over, this app doesn't die. In fact, this app remains the most lucrative after crypto summer is over, because all the opportunity here does not focus on how much the dollar is worth, right? And when I mean opportunity, I mean percentage opportunity, right? So will the dollar values of everything go down in crypto? Sure. But that doesn't change what the utility values inside the ecosystem can do, because all of that is based around looking at the gas token as the only financial instrument that we use as a reference. We don't care about what the dollar is doing at all.
Right. And that's generally how I've played crypto as well. I don't care the dollar price of Ethereum or Bitcoin as much. I'm just trying to get as many of them as I can.
Exactly.
Right? And then do everything in those tokens or other blue chips. And then, like liquidity providing, I could basically make more of those tokens with those tokens. Right. And then when the crypto summer comes and the dollar value of everything is going crazy, then you can harvest some of that yield into dollars and put it into other assets in your life, or donate it to your favorite animal sanctuary, like Karma Farm Sanctuary in Florida. All right, what? Sorry, I had to plug the animal sanctuary.
Please do it again. Yeah,
Karma Farm Sanctuary. Links in the description. I'm always talking about it. It's what I do out here. So anyway, back to how do we make more money so we can donate to more animal sanctuaries, Phithe?
Great question. So, let's see. Which one did I not do yet? I mean, we went to Meeding. We went to the Incantation, the swap fees. Yes. This is active staking, but it's real yield. Does that make sense? So this is not a inflationary or Ponzi-nomical yield. This is arguably how it's designed, because it has like it's a high risk game, effectively. This is the most sustainably high real yield on the chain it is built on. So on Phantom, it is the most sustainably high real yield vehicle. On Binance, is this the most sustainably high real yield vehicle. On Avalanche is the same. That's another way to do it. And you can, in fact, the Incantation is like a world within a world. And I could spend, an hour talking about all the ways that you can make money with the Incantation. So we're looking at this dashboard. So right there, APR is 2,000. That's real yield. The DPR is daily yield, and EPR means yield per epoch. So right there, you can see there's that much staked. That's too much for it to be staked. That, by the way, that means that people are staking it a bit passively. But they are staking kind of towards their appetite, and that is because our volume keeps going up, so the yield keeps going up, and then people are staking more and more, kind of proportionally to that. But that is real yield right now. And
wow.
Yeah, that's real yield now.
And in one day, right now, in the Incantation WitchVault, the real yield is 6.31%.
Yes, but to be honest, you should not stake for a day. Like if you scroll down a little bit right here, you'll notice the design feature. There's a gigantic orange warning label right there. Let's look at it. Danger. This is a WitchVault.
Danger.
Read documentation fully before interacting. Now, I realize now that is a very tall order for some people. Does that make sense? Oh, yeah.
That's some people will only get their information through a video like this, maybe.
Which,
so
I'm glad we're doing it.
That's me too.
If you scroll down even more, there's another orange thing. Being staked in the IWV potentially exposes your position in negative yield, but it's at your own risk. So every single person in there is staking 800. Anybody who stakes on top of them, they will receive what's called a smolder. And a smolder is negative yield. The way that works is 0.1% of whatever their stake position is will get burned, caused by the new entrant. So the way that you play the Incantation WitchVault is you want to stake at the last minutes of the epoch. You can see on the screen right now, we have 3 hours and 6 minutes left. So everybody is staked exceptionally early. And
I'm going to smolder them, man.
Yes, you could do it right now. You could take that 1.5% right there. You could smolder them. You could flog them 16 times, and that would completely negate whatever they stand to make next epoch. So 16 of those right now, and it would completely negate them. And this is, again, we wanted to make it clear that this is active staking and not passive staking. This is not 2019. You know what I mean? We have to evolve and differentiate from the stuff in the past. Now, this works. This works. You just have to understand that the reason this is able to keep a real yield at that high is because of the risks involved. Now, you can make a lot of money in a single epoch in the Incantation WitchVault. I've seen people make 60%, right? Certain epochs have a lot of yield, but there's scenarios where the Incantation WitchVault goes arcane, and you can make multiple hundreds of percentage yield every day, depending on how the game works out. Because what that means is the Incantation WitchVault will actually lock out other users from staking in behind you. So you can actually bottleneck yield among a small user group. This is a more advanced scenario that we'll probably see this a few times during Genesis. But,
and that's based in an Arcane scenario with a lockout event happens when TWAP's above 1.01, right?
That's correct. Yeah. So
if you guys are familiar with Tomb Forks or Seigniorage protocols, and you know what time-weighted average price TWAP is of the peg token, then once the TWAP gets to peg, TWAP when the price of the peg token gets to 1, that's like you hit peg, right? When TWAP is 1, you're at peg.
You won, yeah.
You win, right? Now, if it gets to 1.01 in the Incantation WitchVault scenario, all of a sudden it's the Arcane event, and it's a lockout event. Nobody else can stake. You can't get smoldered, flogged, nothing.
Yeah.
If you're in there, you're in there until it goes back below 1.01 TWAP. So that whole time, those people are just making crazy bank.
Yeah, it's a fight. So the way this works is arguably the Incantation WitchVault will give yield to anybody when it's below peg. When it goes above peg, you have to be crazy enough to want to stay in there. Does that make sense?
Yeah.
So the way this fixes Tomb Forks is that this is an upside down border. You understand what I'm saying? Because in a boardroom, you want to be in when it's above peg. Here, it's like you can't get in unless above peg. Does that make sense?
Yeah.
Yeah, and this gives you yield every epoch. Like, it's not like you don't need to be above 1.01 to get yield. It's going to give you yield in 3 hours here, you know?
Right. So that's amazing. And I want to, so we've basically, and we'll break down this a little more here now that people have gotten the general gist of this, that it's active staking with potential negative yield if you get flogged or smoldered, burned at the stake, if you will. So you want to be in and out. This isn't stake it for forever and leave it. This is at the end of this epoch. It's like you're betting on an auction on eBay. You want to just like drop your bet right at the last second, your bid right at the last second, and then see what happens and hope 100 people don't pile in behind you before the epoch ends. And then that's how you can end up snagging these crazy epoch PRs, which right now is 1.58%. If you can make 1.58% like that, that's insane, right? Some people don't make 1.58% in a month with their investment vehicles. Not that this is not an investment vehicle, by the way. This is a game.
Oh, it is it's an investment vehicle for sure. Yeah.
You said it, not me, man. I can't say that.
Yeah, the SEC is gonna, but no, it's a real vehicle. Like it's gamified because I know who my user base is. But the fact of the matter is, this is 100% a real financial instrument. And you're talking about 1.58% here because I know for a fact that the players who are experienced are going to usurp the people who are staked in there now. They'll be making a lot more than 1.58. They'll be making like above 6 in 3 hours. They'll be like quadrupling that because they're going to loop through a couple times. That's a bit of a more of an advanced tactic, but So,
and we're getting into usurping as well. That's also, like you said, an advanced tactic. You have to read the docs. Guys, go read the docs. Okay, there is so much to it. There's the short version and there's the long version and all this other stuff coming too. But read the short version at least. Learn your strategies and concepts and these different products we just talked about. And then go read the long version. And there's a section in here with risk and strategy. And you should really go through this whole thing, and you'll see how nuts this protocol is. The amount of thought and development that went into this is really amazing. I've never heard of any DeFi project like this. I've interviewed like hundreds of different projects now. Never heard of anything like this.
Thank you. Not to brag, but I am bragging. This DApp is economically robust enough to completely fulfill a blockchain's use case by itself. So, like, personally, the way I think is that building a blockchain is an engineering problem, but fulfilling a blockchain's use case is an economics problem. This DApp can do that by itself. It doesn't need another DApp. This is not a project that needs another project to launch. You get what I'm saying?
Yeah.
Like certain projects are like that. Yeah, this product does not need that. This product by itself is the fulfillment of what everyone's looking for.
And that's all. Like, DeFi is always looking as a whole for new use cases, for actual ways to use the blockchain technology that we love out here, this decentralized, immutable, trustless, amazing technology we have. It's revolutionized finance as we know it. I mean,
Yep.
like I'm a liquidity provider. I've learned to become the bank and lend out my money to make really amazing yields in a trustless, decentralized fashion. I don't have to get permission from anybody. I can just go and do it. And that's like the main use case basically is like borrowing and lending, and also like making secure transactions between two parties.
Yep.
There's
actually on the first page of the Ethereum white paper, when it was written in 2014 by young Vitalik Buterin, he specifically outlined 5 things that people should do with smart contracts. And they were basically decentralized exchange, derivatives, peer-to-peer gambling, and then reputation management systems. And I think the last one was, I have no idea what the last one was. But anyways, Pyreswap is all 5 of those things. So when people ask me, like, where do we get the idea? I just say, I read the instructions. Like, this is what smart contracts are for. Like, just like, this is the 5 things that he put in on the first page. But
yeah,
when I see the stuff that people made, I don't think they understood what, like, maybe he was implying people should do. But yeah, this has all that in there.
I love it. So new use cases with real utility, instead of just the whole steal from Peter to pay Paul kind of Ponzi scheme things that oftentimes sneakily get out here under the guise of something else. They try to convolute it. Oftentimes we see a lot of that. But that's one of the reasons I like Seigniorage protocols, because they're based on real economic models. They're at least trying generally.
Do you want to know a $1 billion secret right now?
Absolutely, yes.
Okay. So the reason that I have branded myself and in fact dove into the idea of Seigniorage protocols, Seigniorage dApps, tomb forks even, right, is because before there was a Federal Reserve, in the century between 1812 and 1913, banking was a 2-instrument system, right? There was specie, or known as hard money, which was like gold and silver reserves, right? And banks would borrow and lend gold to each other. So they would do inspections on each other to check their vaults out, right? And that was like a decentralized way they would regulate each other. What they would do based on their gold deposits is they would issue paper notes, which were basically debt instruments known as soft money, out to the public. Does that make sense?
Yeah.
So that's a 2-instrument system. Okay. Tomb forks are the best surrogate of the original banking system before the Federal Reserve. But people don't know that. They don't think like me. Does that make sense? So like, this is actually the best surrogate for that system. People don't realize that. The problem is that nobody viewed tomb forks like I did. And they didn't understand it. Like, you need to think of this as like you have a whole bunch of debt that nobody is managing. And I think that's a problem with Web3 in general. I don't want to sound pretentious, but if you get into the business of issuing your own currency, like issuing your own instrument, you are in the banking industry. Like your job is now part banking. If you're not literate to that, that doesn't mean it's not true. It doesn't mean like whether you believe it or not, it's like, no. You now need to know a thing or two about banking or you're going to get it wrong.
Yeah. Yeah. And we see people try to inflate their way to stay ahead of the debt that they've issued to these people, these debt bonds or whatever. And these people all come to cash in at the same time, and the thing implodes on itself, and the prices go near to zero.
Yep.
And then everybody's mad, right? And it's a bank run, and everybody gets mad. And it's the last person insolvency, and it's the last person holding the bag that gets screwed the worst. So yeah, I mean, that's what we see with these tomb forks. They have generally a lifespan. And I always tell my audience this, like, look at a DeFi project based on its lifespan. If you can guess, like, is it a short-term pump and dump meme coin play, get in and get out before that wave crashes? Or is it a medium-term, like tomb fork Seigniorage protocol, where maybe you can play this thing for a couple weeks or months, making money, doing all the tomb fork stuff that we know how to do? Or is this a long-term play, like staking your liquidity pair tokens somewhere on a DEX and making, just becoming a liquidity provider in Ethereum and Bitcoin? You can just sit that out there for years and just like make a decent return in those assets as those assets are appreciating in dollar value. That's a super long-term play. Now, what would you say Pyreswap is?
Okay, what a great question. It is designed to go 5 years plus for sure. But because we have so many tokens, not every token has the same like life cycle. And the best way to see that actually would if you go to the documentation and go to strategy. If you go to the short version and go to strategy.
There we go.
Yep. So if you go down to, it'll be a red one right there. Let's see. There's right there as an example of the life cycle, right? So you have the share token. If you go to the one, you can see 2Share. It points to 2Ohm. It points to Pyre Phantom. And then Pyre Phantom has a staked version of it, which most people don't think about, but it does exist. And staked Pyre Phantom and Phantom, they're the ones that can kind of cross between each other. But this is the way that we kind of manage the debt. So the way that this is a decentralized credit union, I'll tell you right now, is you start off with the share tokens being considered bonds of association, or known as common bonds. So when credit unions or credit associations were started back in the day, they wouldn't be collateralized, but they would issue like a certain amount of shares, like a certain amount of membership shares about people who would effectively be members of this credit association. And that was kind of like the first thing that was done before collateral. And there's like this fundamental process with the way credit is established. It kind of works like this. Like first exposure is analyzed, then risk is taken, then trust is given, then credit is established. And it's kind of, those are like the 4 steps to do it effectively. So what 2Ohm becomes when it gets printed, it is now credit. As soon as it gets sold, it's now debt. Does that make sense? Now, if nobody wants to manage that debt can get reclassified into Pyre Phantom, in which case it's more like debt consolidation. So before 2Ohm is sold, it's credit. After it's sold, it's maybe good debt. As soon as it gets consolidated, it's now bad debt. And when Pyre Phantom burns off, because by the way, Pyre Phantom does decay, and Pyre Phantom also gets burned from smoldering, that's kind of like debt being discharged through bankruptcy. So that right there is like a credit debt cycle in those 4 tokens, if that makes sense right there.
Wow.
Yep. And the way that you can effectively keep the credit good is when 2Ohm gets printed, you're not going to sell it. You're going to do? You're going to deploy it in liquidity against 3Ohm when 3Ohm gets printed. Does that make sense? So this way, guess what? You're now a liquidity provider in those tokens. And you haven't sold them. Does that make sense? So you're still making money. It's a little bit of a slower nickel. Does that make sense? However, you're still now incentivized to not sell it. And if The entire boardroom can behave in a creditworthy manner. They can collect print after print after print as long as they're willing to put it in liquidity, moreover than turning into debt. And this is how it becomes a credit union. This DEX, by the way, this GPSE, this is a DApp that can grow its TVL without needing outside money to do it. And that is a unique factor of it as well, because that's the way banking works. They effectively are just leveraging, they're extending debt. And that's what you can do with these credit associations. So every share token becomes like a bond of association. And then when you organize these 3 credit associations, they are now a credit union. And we don't manage this like centrally. So we effectively, I'll be training the user base on how to do this. The user base will have community leaders that we kind of like pick and train to do this. And they will effectively organize the investor base, the user base, on how to effectively become crypto bankers and not just crypto DJs. Does that make sense?
That took me a while to learn how to do.
Yeah, no, 100%. Yeah, so we're going to turn them into crypto bankers and effectively change their lives. If you scroll down more, I'm going to show you the another diagram that we have the classification of tokens. That's a good example too. But the users can see that on their own time, I think.
These are great, by the way. Everybody can go through these later.
Yeah, we do get a lot of praise for our diagrams. This right here is an example of when Meeding is profitable or when it's not. Just understand those 4 things. The velvet row pattern, that's the fundamental analysis effectively.
Right.
Yep, a volatility smile. We can get back to that in a second.
We'll go back to that.
Yep, there's one more. Where's the diagram at? The Venn diagram, these are all the tokens and the entire GPSE. So it's quite a bit. It's like 34 there on that chart. Right there, this one. Trading tokens versus holding tokens. So a key differentiator between tokens and the taxonomy of the GPSE is that there's different periods that make the most sense to hold and or trade. Now, the thing that I want to say first is that red candles cannot kill these tokens. Like them getting oversold does not stop the use case that they get from being bought up. In fact, the lower they go in price, their use cases can become more valuable. So when we talk about Pyre AVAX and Stake Pyre AVAX, or Pyre Phantom and Stake Pyre Phantom, or Pyre BNB and Stake Pyre BNB, they're all the same, really, because they're just a token that targets the gas token. Pyre AVAX, Pyre Phantom, Pyre BNB, those I would probably say you should hold for like 12 hours or less. Does that make sense? Because the price is going to be volatile, and on top of that, other people are burning it, and it's possibly even decaying. You're meant to capture real yield and then get rid of this token. Like we want you to sell it. Like we're not scared of the red candle, because you know what's going to happen? 5 hours and 59 minutes are going to go by, and then people are going to buy it up again. Does that make sense? Like, of course they're going to buy it up. There's yield to capture. There's the highest real yield on that chain to capture, and it's going to get delivered as the incantation all in a split second. If people want long-term holds, there's those other tokens right below it: Snow Tomb and Slot, or 2L and 2Share, or Dibs and D-Share, right? Like those are the tokens they can hold. If they want to hold for months or years, I agree, they should. We're not going anywhere. We have 5 phases of this project, and it's likely going to be over a year in development.
Wow.
Not even counting the year of development we've already been doing.
Yeah. So that's fascinating. And I love that you've defined the time periods for holding these tokens. Most projects out here just say buy and hold forever. Hodl. Yeah.
That's primitive nonsense. Like, hey, you can't ever sell this. It's like, what are we gonna do?
Yeah.
Are we just waiting for someone else to buy in behind us? Because that kind of becomes fraudulent at a certain point. You know what I mean? What
they're waiting, when they tell you that, they're generally saying hodl until after we've sold our tokens.
Right. And then okay, you were just screwing somebody over. Yeah. There's a right way and a wrong way to do this. And I was motivated to build this project. And by the way, I'm an economist. Again, I'm not a dev. I have a group of talented devs that helped me. I was motivated by rage to make this happen, because I needed to really prove to people that red candles can be good. That was the whole point. It's can you build a tokenomic system where red candles can be good? So these tokens, their utility value which by the way is other financial instruments, it can be more profitable at lower prices. Does that make sense? And that kind of, that turns into support on the price chart because these tokens don't want to go down in price at a certain point.
Right. So it's very interesting that you're out here, and I know your history. I've been out here for years. I've watched how you move out here. I know all the things you've been involved in. So for those, I kind of want to give a little history at this point. Now that we've kind of shown the complexity here of this ecosystem and given people an idea of all the potential ways to make money in this new advanced experimental DEX, Gamified. What's your history? Why are there 30 tokens here? Like, what are these tokens we keep talking about? Like, let me zoom in on one of these charts here, this Venn diagram, where we've got, what's up with 2 ohm and 3 ohm, and what's F-Tomb and S-Tomb and FO, and what's Dibs and Ribs and Hoggy? Why do these exist in Pyreswap greater ecosystem? How have you acquired these other protocols and their tokens? What in the world is going on for people who don't know you and all the things you do out here in the DeFi community? What is this?
What a great question. Okay, yeah. As far as like my background, I guess it's economics, and I realized it also has to do with banking, which I realized that a lot of people don't understand. I think in earlier times in Web3, like a lot more people cared about game theory and economics, but that kind of has been fallen to the wayside, and I'm trying to bring that back. I think that the DApp layer is the part that's overlooked the most, and that's where the Seigniorage circus plans to dominate. Now, as it pertains to the fact that there's so many tokens in this ecosystem, I don't feel bad about that because the average user, they're learning about a dozen tokens on a dozen products anyway. Does that make sense? We are a crypto market inside the crypto market. So if people have the attention span to learn about 10 tokens, they can learn about 10 tokens before they even navigate to a different website. Does that make sense? Like, if they're willing to learn about 10 different tokens, we got 10 different tokens to teach them. Now, the good news is there's really only 4 tokens, or really 5 tokens, that people need to know about. And that is the share token of a Tomb fork, a Seigniorage protocol, the peg token of a Seigniorage protocol, the bond token of a Seigniorage protocol, then Pyre Phantom, which we call the Mead token, and then the staked Mead token. So there's really only 5 tokens. Does that make sense?
Yes.
Okay. So this Pyre Phantom is the DEX token. It's like it is the fee token of the DEX. It has a staked version called Staked Pyre Phantom, but Staked Pyre Phantom is just like the receipt token. It's not really super important. We're right now in phase 1. Pyre Phantom is an elastic supply token because the way that it gets generated is from the burning of 2 ohm, 3 ohm, and Z ohm. So when Pyre Phantom gets minted by 2 ohm, 3 ohm, and Z ohm burn, with the exception of Genesis, because we will in fact be minting quite a bit of this. Now, what allows our Genesis to be so aggressive is the fact that Pyre Phantom is a token meant to burn like crazy. Does that make sense? Because not only does it burn through smoldering, but it also has a decay tiered system, which causes the token to constantly be going down in supply. The decay happens at the strike of the epoch. So it doesn't happen by random. All the time between the epochs it's completely fine to hold. Rather, it's just during the epoch that arguably the amount of tokens you're holding can be reduced. Now, it also decays in liquidity. So this doesn't actually reduce the value of your holding. But the fact of the matter is it can become a little bit difficult on the math. So people tend to get rid of it. We have the decay on there for the purpose of people getting rid of it, by the way. Yeah, because we don't want people to hold that long. Like if people stop selling it, we lose the fundamental analysis. We want people to sell this token. Like you can buy it later, you know what I mean? And the decay isn't that bad. But like, this is a DEX where the DEX token leverages its own volume. Does that make sense? Because the background volume of the DEX provides the swap fees. The swap fees provide the yield. Well, the token that is used to capture the yield is also a short-term holding token. And therefore, it's getting swapped all the time. So therefore, the yield that's getting captured is actually compounding and flywheeling yield for tomorrow. Does that make sense? Yeah. So the incantation can drive a lot of real yield. Let's put it that way. It's all designed to really quickly and aggressively compound the size of the incantation and the amount of volume.
So I guess I kind of want to reiterate. So you're showing how basically you're able to help manage the supply and inflation issues from these other protocols,
right?
Where there are basically stranded participants, stranded communities that are still holding, but are lost hope. And you've built this giant economic mechanism and ecosystem to basically generate real yield to make these people whole again. Now, why have you done this? Why would you do this? And what are these protocols? Like, what is 2-ohm, 3-ohm? What is Piggy Finance, now called Hoggier? And what's Dibs, now called? And like, what are these? I was in a bunch of these, by the way, right? I was playing these things. How did you end up with them? How did this happen?
What a great question. Okay. So what would motivate me to do this is when the Seigniorage Circus first started out, it was almost like we were like a consultancy group that was kind of like helping a lot of tomb forks pull their heads out of their ass. Does that make sense? And a lot of them did not understand kind of the way it worked, at least during the farm phase. The original tomb finance, managed by Harry Ye, back in 2021, he would constantly be talking about stuff coming up in his roadmap. And because I had already analyzed it, I realized that, like, okay, at the end of the farm, you need something else to kind of create a purpose for this token called Tomb. Otherwise, it's going to lose in a comparison with Phantom, which is the token it's supposed to be compared to, right? Phantom has a utility as gas. Does that make sense? But if Tomb doesn't have a utility, as soon as that farm is over, there's no more point to it. There's no more purpose.
Yep.
And it's not just that. You have a supply issue and you have a demand issue. So effectively speaking, the problem with tomb forks can be boiled down to supply and demand. There's too much supply and there's not enough demand. So effectively, what you need to create is something that solves both of them at the same time. So I conceived of this concept called terminal utility. Now, I did not invent the first terminal utility. In fact, Ethereum burns as gas, Avalanche burns as gas, Phantom burns as gas as well. A terminal utility is any type of token utility that, when it gets used, contracts the supply of the token kind of in the background. Does that make sense? It's meant to drive, so it kind of solves supply while increasing demand, right? Mm-hmm. So I explained that, like, listen, you have this mechanism called the boardroom, which is like an infinite faucet. The boardroom hates the peg. The boardroom's printing is what's causing these pegs to go down, because all you're doing is expanding the supply and then selling more of this token.
Yeah.
So in order to kind of balance that out, you need to kind of solve the supply and demand problem. Like, you have way too much supply because you've overprinted, and you have zero demand because nobody would ever buy this token for anything. There's nothing behind this token. So we basically created this concept where I professed this solution to so many dozens of devs, and I realized that I was kind of preaching to deaf ears. Like, I don't think they had the tenacity to really kind of understand what it took to solve. But to me, it was quite easy. Like, I didn't understand like why they couldn't do it, but I realized what my skill set was just so very different from theirs. And I had to learn a lot of things, like how to become a better communicator, how to become a better project manager. But I wanted to prove without the shadow of a doubt that terminal utility would end up repairing the prices of these tokens. And it repairs them on two different variables. It repairs them in supply and it repairs them in demand. And if you've ever seen that chart before in economics with supply and demand, the thing on the left where supply and demand cross, it's called P for price. Right. I think a lot of
Yeah, I have that hanging up on my fridge like a nerd, man. I literally do. I have a micro economics cheat sheet and a macroeconomics cheat sheet. Yeah.
Good. A lot of devs, they think that when they need a fixed price, they need a solid price. But price is actually a derivative of two underlying factors known as supply and demand. And like, if you just solve supply and demand, price will take care of itself. But I don't think that people really understood like that was the point of this. And it got forked 500 times. I mean, like over a third of them were rug pulled at a certain point.
Yeah.
And I just realized that like the skill set to actually do something with this was devoid. I also knew that Do Kwon was one of the devs of Basis Cash, which is actually the Seigniorage protocol that preceded Tomb Finance. About a month after I devised the solution, Terra Luna, founded by Do Kwon, was collapsing. It was collapsing on its face. And I realized at that moment that my solution was actually the same solution that could possibly even save Terra Luna right now. But at the same time, the problem was nobody was listening to me. When I first came up with a solution, I thought, okay, this might save like a few million to a few dozen million to maybe a few 100 million of investor money, right, from Tomb Forks collapsing. But then when I saw Terra Luna collapse, I realized, wow, the solution I came up with is actually probably worth billions of dollars and nobody's even listening to me. So I basically lost my mind, Alex, and I just started acquiring Tomb Forks. I'm like, I'm going to show you how I can solve this for so many Tomb Forks at the same time, and everyone else is going to think it's fucking magic. And it's not fucking magic. It's supply and demand. It's literally like it's Econ 101. But I remember one of the devs I was working with, he always said, you know, I was telling him what terminal utility could be, and there's so many things you can do it. And he told me, he's like, but people in DeFi, they're here to make money. And I'm like, well, that's fine. Just make them investment vehicles, make them financial instruments. Then I realized that nobody knew what that meant. And I realized that Web3 had changed a lot since 2014 when I first got into it. So I was kind of like, it was kind of revealed to me that this is the thing that I should do. And I kind of threw my life away in the pursuit of building this. Now, as far as what motivated me, Alex, I'm going to tell you something. I'm not really a money-motivated person. I'm probably motivated by heroism, probably things like glory. My father was an investor, and he bought a gas station in 2007 before the economy went crazy in the United States. And he paid a lot of money for this gas station, and he had never run a gas station before. And gasoline went over $4 for the first time, and the profit margins went razor thin to even non-existent. And my father, out of pride, committed suicide from investor depression, Alex, in 2007, November 30th, 2007, and he died. Sorry. And when I realized, hey, it's okay. If that didn't happen, I wouldn't be motivated to do this. So when Terra Luna was collapsing, on the subreddit for Terra Luna, they literally had a suicide hotline as the pinned post. Does that make sense? And I realized that if more people were listening to me, I could save someone's dad's life right now. Does that make sense?
Yeah.
If I could just get more people to listen to me, Alex, I could save someone's dad's life.
Yeah.
So this right here in previous documentation, I wrote about it because this project is about the loss reversal of investors. Now, does that make it profitable? Yeah, because the reversal loss is to make a profit, right? Depending on what time you got in and what time you got out. But like, that's what really motivated me. The fact that I could make people whole again that were not whole. I actually ended up losing a lot of money on these because I was betting on devs that they would eventually listen to me. And most of them did it. So I ended up acquiring their projects from them because I realized they were not real men. They were just boys. Does that make sense?
Script kiddies just forking something for a quick buck.
Yeah, literally that. Exactly that. And I don't use that as a broad brush for all devs, but like a lot of them.
I'm a dev, but we went through we went through the forking season. We saw it left and right.
100%. And it was disappointing, but like the right thing to do was just to take responsibility myself and just throw my entire reputation behind this.
Yeah.
Yeah, and that's what motivated me to do it, if that makes sense.
Wow, man. That's a touching story. And again, I'm sorry about your father, but I understand, like,
Years ago,
if there was ever an origin story for an economic fixer to come along in DeFi and fix these dying projects and make the investors whole again so that they don't go down a similar road, which I get DMs about all the time from people saying, I lost all this money, I want to kill myself. And I console these people, and I try to like give my time to like befriending them and letting them know they're not alone. I've lost it all like 5 or 6 times learning this stuff over the last 10 or 15 years of trying to figure out investing. And it's really heartbreaking when you hear somebody lose their life savings in a DeFi project that they so strongly believed in, and then something goes wrong, price crashes or a rug pull, God forbid, and then these people are left like lost and scared and like full of shame and guilt. Their families are disappointed, their wives are leaving them or their husbands are leaving them. Like
nightmare stories,
dude.
This is something I say as well. The number one motivator, like the number one thing that people are looking for, it's not to make money and it's not appreciation of the technology. Blockchains are possibly the most ethical piece of technology ever invented. Like they're glorious. A decentralized ledger, you know what I mean? It's glorious, the amount of ethics that can be brought into the world by using these, right?
Yeah.
But the number one motivator is to not lose money. Does that make sense? So the two ones that take a backseat are making money and tech appreciation. Because a lot of people they're in it for the tech, and there's plenty to appreciate about the tech, right? But even more so is not losing money, because nobody wants that ever. Does that make sense? There was a project.
It sucks. It feels bad. It feels like getting punched in the stomach repeatedly for a long period of time.
Because all it takes is a great project with great technology. If they don't know what their job is as far as being an exotic banker, they're going to fuck up the money, and then no one's going to care about the tech. Does that make sense? I've seen so many great projects with amazing tech. They don't have monetary economics in their skill set, and they fuck up the money, and then nobody gives a shit about the tech. And that is important. That is the rerun every single week that happens in this industry. Every single week.
You make a very interesting point. That is why my main strategy of these AMAs or any DeFi video I make about a project, even if it's a sponsored video and I'm bringing somebody on, I want my audience to know 2 things. Mainly, by the end of the whole AMA, I want them to know the value proposition for them, and I want them to know the risk reward profile. So that way they can understand what's in it for me, what's my incentive to participate, and if I do, what is my risk to reward ratio here of doing so? I need to know all the risks, and my audience needs to know all the risks so they can make a fully informed, consensual decision before they participate in any of this stuff, and then they can make an informed decision.
100%. 100%. In response to that, I will say this. You don't need to learn all 6 ways in Pyreswap. Does that make sense? Yeah, it's not required. Yeah, I'll say this. It's not required to understand all 6 ways. You can use one of them. You can show up just for Genesis. It'll be just fine. It is a lot to learn, but I do recommend that people do try to learn. So in our Discord server, up to 6 times a week, I'm on screen share answering questions, right? So anybody who's new, which again is like virtually everybody, I would say maybe the only people who aren't new, there's only like 50 people tops. We're here I answer questions, and I do it on a screen share with a demo wallet. They can watch me play, or they can watch me interact. I mead on screen share. I play the Incantation on screen share. Yeah, like everything they want. I deploy the liquidity that they can see me do all this stuff. And it all works. We've been beta testing since February. Yeah.
Yeah, everybody go join the Seigniorage Circus Discord server, the Pyreswap Discord server, and go follow Seigniorage Circus on YouTube. I was actually on YouTube watching a bunch of your AMAs, that you've done in the past, doing just what you said, showing people how to play each one of these different products that you've built into the ecosystem. It was very educational. It got me up to speed very quickly and showed me what personally I would be interested in and what I wouldn't be, just based on my personal preferences and risk tolerance level.
Yep. That it's funny you say that. This is designed to kind of appeal to the spectrum of users as well. So like the way that this is economically balanced is we basically create vehicles that are very, very high time preference. I mean, people who want to make money quickly, and then people who are comfortable making money slowly. Does that make sense? And that is how you can kind of complete the economy inside a single app. Basically, you have to kind of create differentiation there. Most dApps or most projects, and I'm not trying to knock any project, if the only thing going on in that project is the token, then what you've done is you put every single user in the exact same position. Does that make sense? So you don't create the balance. It's really more like a lever. Like everybody is kind of like tilted over on one side. If you and I lived in like an agrarian village and we were both potato farmers, right?
Okay, yeah,
right?
yeah.
We would never trade with each other. Does that make sense? Because I would think my potatoes are the best and you would think your potatoes are the best. Does that make sense? So there would be no economy. In order for us to have an economy, I had to start growing broccoli. Does that make sense? And then now we would trade potatoes for broccoli. So if a dApp doesn't have like diversification on positions, then it's never going to be like economically complete. Does that make sense? So by the way, this diagram, six ways to make money, that's just phase one of the roadmap. Every phase of the roadmap, there are more ways to make money in Pyreswap.
And that is all like right on the homepage, you guys. Go to pyreswap.com, Pyre swap.com. And here's the roadmap. Here's that chart we were just looking at with the Venn diagram of the greater Pyreswap ecosystem. This stuff is so educational, and you can see everything that's coming in phase 1, phase 2, phase 3. And there, I mean, you've got interesting things on here like boss battles, monsters. What's your vision? Like you've shown us this awesome diagram with the 6 ways that we can be incentivized to participate in Pyreswap, which is very important, by the way. A few founders or developers I bring on to the show can't articulate or tell me what the incentives are to participate. And that should be like number one in this is finance, decentralized finance. Like, why would people be incentivized to even care about this? The tech could be so cool, like you said, but if they don't get the money right, nobody's going to care. So you've got 6 amazing incentives built in already. What else do you have coming? What's the overall vision here?
Great question. So this moves from this is a decentralized credit union. And in phase 1, you could say it's a decentralized aggregate credit union or a decentralized association credit union. What that means is there isn't like credit rating systems established for individual users. It's not really shown on this roadmap. It's shown on the documentation roadmap, which is a bit longer. But in phase 5, we actually have NFT credit cards and individual credit rating systems. So the user base becomes literally like the underwriter to the lender. And these are uncollateralized loans. Now in DeFi, there is like a few uncollateralized lending apps, but they don't really do well, and they do KYC in person. We don't look at humans at all. We just look at wallet addresses. What allows us to build reputation systems, which by the way, that's what a credit rating system is the fact that our dApp is so robust, we can watch wallets doing tons of things inside the GPSC, right? So if we have one wallet address, we can say, okay, they interact with this, they interact with that. We can build this profile of saying like, okay, do we feel that those actors that do that frequently are credit worthy or uncredit worthy? Do we think that people who are impatient are more credit worthy than those that are patient? Does that make sense? And through this, we can create this spectrum of whether or not you want to take risk on them. In fact, that's more like in phase 5, like phase 4 and phase 5, which I haven't shown there. But again, we will have NFT credit cards. Yeah, that's real.
Wow.
You can even sell them, right, with a balance. Does that make sense?
Fascinating.
Yeah. So by the way, like NFTs, I feel like they lack utility a lot. It kind of makes sense that they should have a financial utility. So why not make them a fucking credit card, right? Like why? Like, or rather, it's also
I've got a wallet. Why don't I have credit cards in it?
Exactly.
That's cool. Like that's a super cool idea, actually.
Yeah. Yeah, and of course they're still gonna have like these they're still gonna have art on them too. Do you know what I mean? Like they will have art, but they will have artwork as well. It will just so happen that if you have one of these, there's a smart contract called a branch manager. It's not deployed yet; it's in design. But these branch managers, they show up on the events page, which is also not in phase 1, and the branch manager will show up, and the branch manager will have a list of biases. Does that make sense? So the branch manager, these biases are like randomly generated. We're gonna have like a neural net do it. And these biases will be like, okay, are they in the tomb forks? And it'll decide whether it likes those guys or dislikes those guys. It's like, do they play the incantation every day? And it'll decide if it likes those guys or dislikes those guys. But this is average. This is random things that you can assign credit on. It can also assign credit on if your wallet has too many zeros in it, or if your wallet has too many letters in it, or if your wallet has too many odd numbers. It'll just have a list of biases. Like, you know what? I think that people who have too many 7s in their wallet address, those guys are a bit less creditworthy than people who have 5s in them. You know?
I don't trust them.
Yeah,
I don't trust them.
Yeah, I don't trust them. Yeah, exactly. And you think that's nonsense. You think that's nonsense, but you would lose your mind if you learned about how credit ratings are picked, like, you know, in the real life. Like they're basically just like, I can't see anything about this person. We can do it, you know, the blockchain, it can show you every single thing a wallet has done since the beginning of time. Does that make sense? So you can actually think about like, wait, what are they doing here? And we have to use subgraphs to build that, by the way. So we have to use subgraphs to build these systems where we can kind of like weigh, like, okay, what's the frequency with which they play the incantation? What's the frequency with which they claim prints from the boardroom, right? What's the amount of liquidity they have deployed compared to the other liquidity providers? Does that make sense? So like, you're a liquidity provider. Don't you think that people who deploy a lot of liquidity and leave it there for 6 months might be more creditworthy than people who never do it?
Absolutely.
Right.
If I've got thousands of dollars that I'm providing liquidity out there for, like that's collateral, right? Really.
Exactly. So like, again, there will also be ways that other people can pay off the debts of people that are bad at it, and they get boosted their credit rating. Does that make sense? So you could deploy liquidity. Think of it this way. You get a yield on that, right? You get a real yield. Well, imagine if you could deploy that liquidity, part of the yield would get used to pay off someone's debt, but your wallet would get a boost to its credit rating for doing that. Does that make sense? So you now have a difference of incentive as opposed to just the normal yield. So we are, in fact, advancing what you can do with a liquidity instrument as well.
So you can basically buy a higher credit rating by helping pay off somebody else's bad debt.
1,000,000%. Yeah. But think of it this way.
Interesting.
Like, yeah, if you had 3 guys, right, to loan to, right, Larry, Curly, and Mo, right, and you knew that. Okay, you knew that one of them was like in debt. And that like, you knew that one of them had like $500 in debt, and you knew nothing about the second one, but you knew that the third one was paying off the debt of the first guy. Does that make sense?
Yeah.
Okay. Now, which of those 3 guys do you find the most creditworthy? If you only know those 3 things,
the Good Samaritan paying off the other person's debt.
Yeah, exactly. So the fact of the matter is that you can even incentivize people in Web3 to not be shitheads if you understand banking. Like, it's crazy. Like, you can even incentivize, like, oh wow, I can be financially incentivized to repair the debt damage caused by another degen. Does that make sense? You can do it if you're good at banking. If you understand banking, you can do it. And we're gonna do it. Yeah.
So that's fascinating. So that's like phase 5.
That's 2025 probably. Yeah, something like that. Yeah, that's a ways away. But that's the far vision. Yeah. And of course, our NFTs will probably be the most valuable NFTs ever, because I don't know of any other NFT that you can get like a credit limit with. And these are credit limits that could be like hundreds of thousands of dollars. Does that make sense?
And what prevents a shithead from buying a credit card with a $100,000 credit limit from somebody and then going hog wild buying a Lambo and then not paying the debt back?
Great question. Well, we know who sold that credit card.
So then they lose their credit worthiness.
Yeah, if that credit card is associated with whoever minted it, it's like, okay, well, there's still an outstanding balance on a card that you minted, right?
Yeah.
Does that make sense? So it can be like, it's like a cosign, right? But it would be valued differently. It will be valued differently. Now, at the same time, I think that if somebody sold a credit card, it would be that like it has a lot of balance and they don't have the ability to pay it off. People who buy one,
so you buy it for 90 cents on the dollar.
Yeah, so you buy it at a discount or 10 cents on a dollar, and you buy it at a discount, and you can maybe deploy liquidity to repair that debt. Does that make sense over time? So over time, you might get a $100,000 credit card, and it's now yours, and it's clean, right? Because like you effectively repair the debt of the person who sold it. They can't really buy it back from you, but you might be able to flip that credit card to somebody else now because now it has a increased credit limit. And that's an example. Yeah. Now, as far as like what's stopping like a person who's shitty from doing it, nothing. But like at the same time, yeah, if it's associated with your wallet, associated with your wallet. As far, a lot of people, when I first talked about that, they're like, but people will be making new wallets up all the time. And it's like, we're probably not going to issue credit to like a wallet that was spun up yesterday. You know what I mean? Right. Like, would you? Would you?
No,
like, yeah,
absolutely
exactly.
not. No.
You have no history. People don't know this, but this whole blockchain cryptocurrency thing, it is a dynamic communal credit volume. That's why it has value, because when you look at a credit rating, you're looking at activity and history. Now, what is that ledger? It's activity and history. It's activity and history for like the whole coin. For Bitcoin, for as example, is activity and history. So like, why does Bitcoin keep going up in value? It's because you can keep seeing its activity and history. You know what I mean? It just has more and more credit built. Does that make sense? And the rest of it is actually just people moving debt around. Yeah, they're literally just borrowing and lending from each other.
This is fascinating stuff, really. I mean, looking at this from like a bank, like a higher level bank manager's perspective, and looking at blockchain technology is fascinating, really. It's like having a credit report on everything like the dollar has ever touched. Which you can't, exactly. Which you can't because a dollar, there's physical dollars that go around for drug deals and all sorts of nefarious stuff you can't trace.
Counterfeit ones,
all sorts of stuff like that. But with Bitcoin or these public ledgers, everything's public, everything's recorded forever. Criminals, really, they don't understand if they're doing stuff like this on the blockchain. At some point, AI is going to get so good at analyzing forensically everything, and everybody's going to get popped.
I can't wait.
At some point, So if you're doing shady stuff out here in crypto land, your time's probably limited before that'll catch up with you in some form or fashion. So be super careful, whatever you end up doing, and try not to be a shithead out here. Right? You can make money in awesome, ethical ways by becoming a decentralized banker like me. Like, I provide liquidity. I speculate on DeFi degen stuff for fun. I call that gambling. I have a small gambling portfolio. I have a speculative tech startup investing portfolio. I got my blue chip portfolio, and I got my liquidity providing portfolio. And all of these are making money in different ways. And then I also love new stuff like this, especially new DEXs and Genesis launches, where the yields in a very short period of time are generally astronomical. And, I could be making 2, 3, 4, 5% a day for 2-3 weeks, maybe. And that's crazy.
Okay. Right? Our Genesis is it's novel. Let's put it that way. It's not like a Genesis you've seen before. It actually expands total supply at 9.25% daily. And the way that most Genesis curves go is a logarithmic one. So it packs all the yield into like the first day or two, and then it like tapers off, and it's kind of like
it's a first mover advantage.
No, not ours. No, ours actually gains aggression every single day. So every single time somebody stakes or unstakes from the Genesis contract, which is again hundreds of times a day, right?
Yeah,
it will correct to the total supply, and emit 9.25%. So it corrects, like it's always seeking an expansion rate of 9.25% a day. Now, the token also decays, which is why we can kind of like compensate for that. Does that make sense? But it doesn't decay at 9.25%. Does that make sense? So like the lowest it could be is like 3% a day, and like the highest it could be is, again, 9.25% a day. So yeah, so it's, and of course, and it's not a shit coin. Does that make sense? Like there's a reason to buy this coin all the time because of the fact that behind this token is gated the highest real yield on that blockchain. So like we're not scared of overinflating it because one, its utility burns the shit out of it, and two, it's the highest real yield. Does that make sense? So like this is the token that has the ability to sustain that type of aggressive genesis. I don't think other tokens can do it.
Wow. So during the Genesis event, are you able to sell any tokens?
Yeah, sell anything you want. Yeah.
So like, let's say you get in day 10 and let's say you make 3 or 4% in that day and you're like, oh man, I'm going to cash out. And the next day you cash out, you sell, you can literally sell that back into your blue chip tokens or
100%.
stable coins.
Yeah. Red candles cannot kill this project. Yeah. Red candles cannot kill this project. And I think it's embarrassing. I think it's embarrassing that it's like, oh no, don't sell. Like, I mean, there are tokens that will pump and go to the moon inside the GPSC because of this for sure. But like, you can sell those too. I'm not scared of any of these dying from somebody selling. Somebody will come and buy that up because this is not a product that's going away. There hasn't really been, 2024 has been a lot of meme coins. You know what I mean? And maybe some like layer 2 launches and stuff. But I think that layer 2s are getting saturated and there hasn't really been like a real evolution of DeFi shown so far in 2024. It's our goal to kind of like take the lead here. I think this is the perfect time for us to do a Genesis. Genesis goes for a whole summer. So by the time it ends, Bitcoin could be over 100 grand. Who knows what it'll do? It'll be the most aggressive emission schedule you ever saw on a Genesis.
You guys heard it here. The most aggressive emissions schedule in a Genesis that lasts for 9 days.
That means lucrative. Yeah, that means lucrative, by the way.
Yeah, so that means, and you can sell those tokens you earn at any point during that Genesis event. So like I am definitely going to be participating in this Genesis event personally. That is my opinion, you guys. So I try to tell my audience what I'm going to do, and then later I'll tell them how it went. I mean, they can follow along with the project and see how it goes. But again, guys, be careful. Whatever you end up doing, don't YOLO into anything, because even if like you love Phithe here and you trust him and everything, I trust Phithe more than most people out here. I've known him for a long time. We've had I was the first person he ever doxed to out here. Yeah. So he's I'm the first person he ever got a video chat with because of my reputation and everything. So like I trust Phithe, and I know so many others do because he's rescued their protocols and like helps so many people. But even with that, even with a high trust, even with a high moral credit rating in the DeFi world, let's use some of this terminology. You've got a good credit score out here.
Thank you.
A good social credit score. Social credit scores are terrifying, by the way. Anyway, you've got a good social credit score. And even with that, though, you don't know what you don't know. And with any contract, with any new technology, even if it's a forked contract that's known to be vetted and good, there are always the potential for technological risks. We don't know what exploits could be developed in the future. So spread it around, diversify. Don't go all in on anything. Don't put all your eggs in one basket, because if something happens to that basket, you're gonna have to deal with that with personal accountability. So I always try to give disclaimers to my audience and be as responsible as I can and just help people out. Not financial advice, but like diversification is very good. Not going all in, not YOLOing the rent money. Like just be wise with your money. And if you do that long enough, like there are so many opportunities out here. Like if you diversify over time, eventually you build up a really good capital base to play around with. And all of a sudden, the yields are getting pretty crazy and your risk exposure is very low, where if you lose 5% of your portfolio, not at the end of the day, you'll make that back next month or whatever. You'll be just fine, versus losing 100% overnight because of something nobody saw coming, like Terra Luna, for instance, where somebody did like a George Soros style financial malicious strategy. Yeah. And took down Terra Luna like he did with the British pound back in the day. I've got the Alchemy of Finance book up there, by the way. It's fascinating stuff. Yeah, and a lot of people don't know these, don't think of these things. They never see it coming, and that's why it's good to have somebody familiar with economic theory and trying to get the money right above anything else first. Because, like you said, you could have the coolest tech in the world. I see all these like decentralized infrastructure projects or games, or AI projects or whatever, but the tokenomics makes zero sense. And I'm like, this is not gonna make it long term, I don't think, because they're just gonna inflate their supply. The team gets these huge distributions.
Nobody can sell. Yeah, I know. It's just ridiculous.
And there's no incentive to keep it going. So even if they make this tech or whatever, but the token dies, like the money dries up, the company's just kind of just out there, then and then usually they get abandoned at some point, if they don't become like one of the top tokens or whatever. Anyway, it's really cool. You're really trying harder theoretically and conceptually than most folks I see out here that are just trying to do the same thing over and over again. You know what I mean?
Yeah. Throw something on the wall. Yeah.
Throw something at the wall, or take something that worked before and reskin it and try to do it again, which is fine. And I've played those projects and made money. But again, I remember the past and I play that accordingly. And I know a lot of other people are playing the same strategy because they remember too. And I'm playing against them. And I'm trying to get an advantage over those people in these markets. Now, you're building something that's interesting because you're trying to unite multiple communities, 30 tokens worth of communities, and for the benefit of everybody, which seems, it seems almost too good to be true. So I've got to ask you now some hard questions, Phithe.
Sure, let's go.
What's the biggest risk here, in your opinion?
The biggest risk?
Yeah, the biggest risk to participants.
I think the biggest risk is actually like people not doing due diligence. Like we just saw before on the Incantation and WitchVault screen that there's a gigantic orange warning label, and people they just did not care. Like right now, you can see right there, it says current Pyre Phantom staked 800. That person is going to get wrecked. Like, I'm just being honest. Yeah, that right there is a problem, because they're taking this as what they know in the past. And I think that the fact that we put that gigantic orange warning label there to be transparent. If you see it even flares up, it's actually a GIF, right? It flares up like lava right there, right? So please take that into consideration. Within crypto, there's always risks. One thing I wrote about before is that you need to differentiate between security risks and financial risks. Does that make sense? Because financial risks are fine as long as the risk versus reward is understood, right? There's a lot of reward in the Incantation WitchVault because there's also a lot of risk. Does that make sense? So that's right there. As far as let's see, let me think about. When it comes to meeting and Meedatrage, you can end up losing money if you do it the wrong way. So that's a risk right there. Right there, if you tried to meet too long for Pyre Phantom right now, you would take a loss. Not a huge loss, but you would take a loss. So that right there is a risk. Let me think. When it comes to the next part would be the Incantation. I think I just covered that one. Let me see. The third one would be fundamental analysis. That's a trade, so there's always risks of loss associated with trading. Then we have Genesis. Genesis, I would say that there is always a risk in the Genesis. The Genesis contract is built from a an audited contract, but it's modified. So arguably you could say that the audit is only partial on the Genesis contract. That's a risk. So the audit on the, it's a partial audit. It's an inherited audit. Also, the Incantation WitchVault is technically only partially audited. That makes sense? Our LP is right now in this phase one, it is a vanilla fork of Uniswap V2. So we consider that perfectly audited. So as far as liquidity provision, that's safe, right? As far as UniV2 goes, swapping is the same. Meaning, there isn't that much risk other than what I described. And Seigniorage comes from the tomb forks, which most of the fact is time that they're audited, there hasn't been exploitation there. But I'm just being as transparent as possible. We have that banner up at the top of beta testing in progress. We are in talks with auditing companies, and we're explaining to them that, like, hey, we're going to be deploying these contracts and then possibly rebuilding them in phase two. Does that make sense? Phase one was more about proving the underlying theoretics, if that makes sense. And the fact of the matter is like, we need to prove them at scale, which is why we're doing this Genesis event. So why the site looks as pretty as it does. I think we're ready to get to market. And Web3, they do enjoy beta testing. They kind of don't want to see the finished product. They want to get in early, right? So that's our go-to market, as it were. And but yeah, that's just part of the risks. And like, we are explicit about that, but which is why we say beta testing in progress. I think that, like, that's clear. Like, when there's beta testing in progress, participate your own risk. We put banners up everywhere. There is as far as the Incantation WitchVault goes, because I said before it's only partially audited. The reason that we're okay with this is because it's not supposed to hold a lot of money for a long time anyway. Yeah. Does that make sense? So like right now there's 800 in there. That's probably already too much. But the fact of the matter is, when you look at most exploit vectors that get done on Web3, they're normally targeting like a big pile of money that's getting left unattended for a long time. Does that make sense? Right? It's like a heist. We don't really have anything heistable, because what's interesting about this is I'm not trying to like take everybody's money and put it in a pile. What I'm rather trying to do is condition them to keep cycling their money through Pyreswap. Does that make sense?
Yeah.
Right? Like, I want them to hold it in their wallet at the end of the day, but I just want them to keep visiting Pyreswap. Does that make sense?
Yes.
Yeah, because in the end, I'm a DEX and I'm after volume. You know what I mean?
Yeah, and you actually have some really good verbiage about these risks and about the smart contracts that you were just talking about on the
bug bounty program.
Yeah, the preface section of the Pyreswap documentation about the bug bounty program. So any devs or hackers out there, you could potentially, if you find an exploit on any live current smart contracts that are in production currently and haven't been found yet or anything like that, you could potentially get a very significant reward that would far outweigh any amount of money you would probably be able to snag out of one of these contracts, like you were saying, because the only smart contracts that aren't known, good, and vetted from previous forks, previous contracts that you forked, won't be holding much capital
for a long time.
A long time. So it wouldn't really make sense to be able to it wouldn't really make sense to exploit that. And you basically incentivize hackers. If they find something like that, they would probably end up making way more money by working with you guys and be like, hey, I found this. And then that way the project continues, so, like, without having some like
100% and
news event.
Yeah, you know. And another aspect of Web3 exploits is the red candle. So we kind of mitigate that by just making it so that red candles can't go to a project. You get what I'm saying? Because when an exploit happens, if it's like, you know, some bad actor, they take a bunch of like a product's token and they steal it and then they fucking dump it. It's not just the fact that it got stolen; it also got sold. So like the people who didn't even get robbed, So God forbid something that happens. If a red candle happened, it doesn't kill the project. Does that make sense? Yes. Like, so yeah, our tokenomics is resilient to red candles in the first place. So like, yeah.
So here's like the the beta testing, with Pyreswap, Pyre FTM token. This is the price action, and it follows. If you zoom in real close, you can see that red velvet rope pattern that we were talking about, also known as the volatility smile, this little curve here. And it basically follows that pattern every 6 hours. And
virtually.
And then you said red candles can't kill this, right?
Yeah, because like effectively speaking, like I have a part of my theoretics is two metrics, and it's TRB and TRS. And TRB means total reasons to buy, and TRS means total reasons to sell. So most of the tokens, like the tokens that matter, like the tokens that we're driving the volume to, their TRB goes up when their price goes down. So if the total reasons to buy go up when the price goes down, it becomes more likely that a green candle will follow a red candle. Does that make sense?
And that's why things like OHM, in theory was a great idea. They just got some things wrong, and then they got like the bonding exploit thing happening, all that stuff. But they had a good incentive where, like, if the price goes down, the APR goes up, and vice versa. And that was just like that lever that theoretically it worked great. Obviously, they had inflation issues. They didn't have terminal utility or anything like that. But so you're using the those levers here. If price goes down, you lever up the other incentive measures to increase buy pressure, to increase demand. And then when demand is high, then you can crank down those incentives to increase sustainability. And then it kind of goes like that, right?
Yes, literally like that. Yeah, I would describe it as like a pair of balances, right? Like balances of pans, like a pair of balances, right? So like a scale with two pans. That's the most primitive economic instrument. So whenever you're trying to build something here, I think you always need to consider the balance of things. A lot of things get designed to not have a fulcrum, meaning like not have a pivot point, because I think in software development, best practices is normally try to make this as frictionless as possible. Does that make sense?
Mm-hmm.
But a fulcrum is normally a friction point, if that makes sense. Mm-hmm. And I think that's why a lot of well-intentioned devs end up building Ponzi schemes, because they're just trying to make it as friction-free for the user base. But what they don't realize is if they don't put difficulty in there, the thing will collapse. The reason Bitcoin has value is because it actually has difficulty, and its difficulty is in proof of work. You know what I mean? Like the amount of electricity it takes to complete the equation, as it were. Like if their difficulty isn't there, Bitcoin's worthless. Like there has to be, in order for dopamine to matter, you have to have cortisol moments too. Does that make sense? And these devs, they just want everybody to love them, and they try to get as much cortisol out of their DApp as possible. Little do they know, it doesn't work. Yeah, because that's just not real life.
They just want that dopamine. Give me my 2% per day forever, and I'm a billionaire. We're all billionaires, right, guys?
100%. Yeah, exactly.
So, you mentioned the fulcrum and the levering of incentive mechanisms to create a balancing act of sustainability. Now, all along the way, you have factored in tiny little scalpings of terminal utility. Is that right? Of burning and also of incants and stuff like that. So what are the fees like here? So how is this actually creating real yield and utility and terminal utility or burning? How does this all work as this fulcrum is balanced upon? What is what are the fees that are coming out to make this all net positive?
Gotcha. The fees. So in phase one, we do have a high swap fee, which is 0.7%. That swap fee is split down the middle between LPers and the incantation itself. We don't have a platform fee in phase one. We will have a platform fee in phase 2, but phase 2 will also have swap fees that are much lower. Let's put it that way.
Okay.
There is also a meeting tax which we put in there. We put it in there, which is kind of like a platform fee right now, but it's done tactically to kind of provide difficulty on the night side. And what we call the night side is the tomb fork side. So right now, we believe that the knights are kind of already established because tomb forks have been around for a while. What hasn't been around for a while is Pyreswap, right? So therefore, we kind of want to grow the other faction, if that makes sense. And because we want to grow the other faction, we're kind of handicapping the faction that already exists. So that right there is a fee. And that right there is also what you could call it a piece of friction, because we put that there to kind of Meeding is profitable until it's not. And the moment it stops being profitable, it stops. And that's done on purpose, right? So that's right there is one. There's also a staking tax in Genesis. So there is a 0.1% staking tax, and that is to really just make sure some liquidity sticks with the DEX after the event is over, right? Deepening liquidity is better for everybody. And we also have a gratuity, which is not really, we don't think of it as a fee, but the emissions that get the Pyre gas, the Pyre Phantom, or the Pyre AVAX, or Pyre BNB that gets emitted during Genesis, on the front end, we only show you 99% of what you're actually getting assigned. 1% of what you're assigned is instead sent directly to the incantation. So it gets queued for incantation. So we don't think of it as a tax, we call it a gratuity. So like we're always going to mint that extra bit to just put it right back into real yield, because the real yield increases the utility value of the token that we're also kind of inflating. Does that make sense? So in order for us to kind of offset what could be a downward trend with inflation, we're going to jack up the utility value so that way we can kind of swoop out of it. I think that is all. I think that is the majority of the fees associated with this right now. Yeah.
Okay. So you've got fees in there, and they go towards incentivizing the witch's incantation vault.
Yep.
They go towards the liquidity providers. They go towards is that basically it? I'm sure I'm missing stuff. So can you sum them up real quick, the fees?
We have a swap fee, we have a meeting, we have a swap fee, we have a meeting tax about 1%, we have a staking tax of 0.1%. I think that's it.
Okay, and then the Genesis tax as well.
Well, yeah, the Genesis is the staking tax of 0.1%.
Gotcha. Okay.
Yeah, there's no tax on the Incantation WitchVault.
Okay.
Yeah.
And so those fees then go towards the liquidity providers and also towards the stakers.
The Incantation WitchVault stakers, yeah.
Okay.
Yeah.
Do those fees go anywhere else?
No. The swap fee doesn't. The mead tax goes to the DEX, and the Genesis tax goes to the DEX.
And by goes to the DEX, what do you mean?
Literally, like the liquidity stays on the DEX, like as DEX custodial liquidity.
Okay.
Yeah. So it's like there is on. Can you pull up the farms page on the app?
Yep.
No, not the docs, but actually just directly to the.
Oh yeah, sure.
Yeah. So if you go to farm, so right there, if you scroll down. Pyreswap Genesis is a 0.1% staking tax. So all of the LP, so all of these 9 LPs, when you stake them, 0.1% is not yours anymore. That is now permanently the DEX's LP.
I see.
Does that make sense? Because when a Genesis event ends, a lot of liquidity will leave, right?
Oh yeah, for sure.
Therefore, as people compound, does that make sense? We also compound. Does that make sense?
Yeah.
And of course, we have such an extremely high yield. We don't feel bad about this 0.1% tax.
No, I don't either.
Yeah.
I'm from a end user. I'm like 0.1% tax, and I'm potentially making 9% per day. Cool with me, bro. Take your 1.1% tax, build the protocol owned liquidity,
Yeah,
That's
exactly.
only going to help. That's only going to help me in the long run when I go to cash out, right?
Yeah, 100%, exactly. And we're not scared of that either. But yeah, the mead tax is 1%. It actually used to be 3% a few days ago. So we actually reduced it for Genesis to make it a little bit easier. But that tax right there, that also is going directly to platform. So that right there is a platform fee. But in the future, in future phases, the mead tax might go to things like it might get burned. It might go to a prize pool for other games. It might go to another WitchVault because there's going to be other WitchVaults in future phases as well. So we're going to have the meeting tax be a little bit cooler in future phases. But right now, it is just blatantly a platform fee, and we have a big orange label for that.
Got it. And I highlighted it here on the screen. Okay, good to know. Now, what happens to, let's say, if you're in the meeting page and I'm doing 2 ohm to Pyre FTM, what happens to that 2 ohm token that I've exchanged?
It is getting burned. Yeah.
Wow.
Yeah.
That's just getting burned.
Yeah, it is deleted. Yeah. It's not. Yeah, it's not even going to a burn wallet. These tokens, 2 ohm has a function in the contract you can call that burns it, and it effectively is just eliminated from total supply. So Pyre Phantom, its main expansion method is from Meeding. So aside from Genesis and aside from like the bug bounty program and I guess the marketing fees, the only way for Pyre Phantom to expand is from the peg coins of the Tune Fork. And since the peg coins can get printed from a boardroom, there is arguably an infinite supply of them. But what we have to do is we have to manage the oversupply. So 2 ohm gets minted and printed from the boardroom. Then it gets burned to mint Pyre Phantom. Then Pyre Phantom gets burned in the Incantation WitchVault. So we basically have these two stretchy strings attached to each other. And this is the way that we can kind of bring them all back up to where their pegging ranges to the Vibratory range. And this is also what allows us to be the best DApp in crypto winter. Because when the entire crypto ecosystem starts to shrink, we will actually be able to resize for that new economy. We'll always be able to respond dynamically to the economic conditions of crypto around us.
Interesting. What is your incentive, or what is Pyreswap Ecosystem's incentive to burn 2 ohm? Like, how does that?
Oh, well, we own 2 ohm now. Yeah, so we did acquire 2 ohm. And for me, I think this is like, I told you so. Yeah, like what's my incentive? Yeah, just literally just, I told you so for the rest of my life. I'm kidding. But yeah, no, so what this allows us to do is when 2 ohm gets back to peg, it now prints again. Yeah, it prints on its own website, 2 ohm finance, 2ohm.finance, which is that we own that website too now. And we will be overhauling that website actually. So we will be upgrading it, let's put it that way. And when it prints, we also are able to deploy more liquidity on Pyreswap. So these Tune Forks become like liquidity faucets for the DEX.
Wow. Okay, because I've been trying to put this together.
Yeah.
Why? Like, obviously, because you've taken this upon yourself to rescue these protocols, and you've been building this for a long time to bring them back to peg. But then I'm trying to figure out how does that benefit the Pyreswap ecosystem as a DEX and as a community?
It's more volume. And the thing is, like, it was kind of obvious that when we took over these projects, like, okay, now we have, when I first took it over, it wasn't 30 plus tokens. There was like, a dozen. But like when you get into the idea that you have to manage or kind of like systemize a dozen tokens, it's like, well, you're going to put them all in liquidity. So why not just like make that the goal here? It wasn't like the goal. This is not a DEX to be a DEX, right? It's a specialty DEX, if that makes sense. And it just so happens that like putting them in liquidity with each other, it kind of diversifies liquidity theory so far. Does that make sense? Because most liquidity pools you see, you pull against the gas token or you pull against a stable coin. Does that make sense?
Yeah.
And we are kind of bringing graph theory and subgraph theory into liquidity by creating these liquidity maps. Does that make sense? So What we allow here is we allow for 2-ohm and Pyre Phantom to be in pairs with a lot more tokens than they normally would be. Does that make sense? And that is only beneficial to a DEX. So you might remember from the original Tomb Finance, it said something like this. Tomb solves a liquidity problem on Phantom, right? And nobody really understood what that meant. But if you're going to actually do that, you want your Tomb Forks peg token to be in as many liquidity pools as possible. If this is meant to be a token that solves liquidity problems, then use it to do that. Does that make sense? They never did that. But hey, who am I to judge? we're going to do it with 2-ohm, 3-ohm, Z-ohm, and the rest of the Seigniorage.
Yeah, and those are just the ones on Phantom. Like,
yeah,
you've also got all the ones on BNB Smart Chain, on Avalanche.
More chains to come.
That was my other question. Are there plans to expand to other chains and to acquire other protocols?
Yeah, 100%. There are. How about yes? I would love to tell people what chains they're going to be on, but I'm not going to yet because the amount of alpha seeking behavior, we'll call it that, is through the roof. So I'll just say that will be announced later. And if they once they see my proof of concept here, I think there'll be a lot more bullishness on the fact that we will absolutely put Pyreswap on as many chains as possible. Yeah, I have zero problem bringing this to like 12, 15, 25 chains. I don't care. You know what I mean? Again, this one dApp can completely fulfill a chain's economic use case. So there's a lot of EVM chains where like their DeFi neighborhood looks like a slum. Let's put it that way. So like we could literally just put Pyreswap there and like, they now have an economy. Yeah, just to be honest, like we could. I'll tell you this: Pyreswap is capable of like economically dominating a chain. Like,
that was my next question that I had written down is
a lot of influence.
What is the potential effect that Pyreswap can have on a chain and the native gas token on a said chain?
Okay, so the first part is that it drives transaction volume. This is like it drives the use of that token as gas. And the use of that token as gas is actually this infinitesimally small amount of its volume that matters so much. So like Ethereum, most of the time, Ethereum has a ratio, and I call it the utilizer to speculator ratio of between 1 in 500 and like 1 in 2,500 of Ethereum being used as gas versus Ethereum being speculatively traded. Does that make sense? Every day. Okay. So there's 500 Ethereum being traded for every 1 Ethereum being used as gas every day, or up to 2,500, right? It fluctuates in this range. Phantom is sometimes like 1 to 100,000. Does that make sense?
Yeah.
But the point being is that like if this token does not get used as gas, it doesn't have that ratio at all. And that's why like those tokens collapse. You have to have some of it getting used. Otherwise, there's nothing to speculate on. So the fact of the matter is that we're able to drive that ratio significantly higher because this is a volume engine. It flywheels volume, like I explained before with the velvet rope pattern. Because of that, all of these tokens you see right here on this page, 2-ohm, 3-ohm, Z-ohm, and Pyre Phantom, they all care about Phantom a lot more than most tokens on Phantom. Does that make sense? Like their entire use case is built around what their price is compared to Phantom, which is why we have them at ratios right there. 1 2-ohm equals 0.1335 Phantom. 1 Pyre Phantom equals 0.1249 Phantom. We do not care about what they are compared to the dollar. We do not care about that at all. And that is done for a couple of reasons. One, we elevate the status of the gas token. It's not just gas. Now it's our numeraire. Now we kind of design our economy around this is the token we use to price things in the economy, right? So we're not using the dollar anymore because if we were, why would we be in DeFi, in my opinion, right? So let's think about building something that we care about the gas token as the measure of price, right? Like, okay, well, what's the price of this? The price of this is 0.1249 Phantom. Do I care about whether Phantom is 20 cents or $20? No, I just know that it's 0.1249 Phantom, right? Phantom's dollar price is something that's completely irrelevant. Is it nice that it goes up in price in summer? Yeah, sure. But we're also fine with it being winter. We're fine with it being 18 cents too. Like, does that make sense? Because the percentages are all the same to us. So that's what allows us to kind of, I think that the time that will really shine, like this app, I am fully confident by the time that we're in phase 5, we'll be able to break into the top 100 market caps as an aggregate. So not one token, but all 30 plus tokens. If you took all their market caps together, I bet we'd be in the top 100, not by phase 5, around phase 5. And I think the times that we'll really be climbing the ladder is during winter. And I know we're coming on with crypto summer, so maybe that's not exciting to people. But I think during winter, you really learn which projects are trash and which ones are fucking not trash, right? And I think that's when we'll be making like serious gains on the fucking market cap list effectively, because other projects will just not advance in winter, you know what I mean? Or they'll just die. That won't happen to us. That won't happen to us. We'll be able to even contain community because we can contain profitability and, lucrative opportunity. So that is, people don't realize what that does to the token itself. But if you elevate the token status, you're elevating its value. You get what I'm saying? So like we make the gas token matter more. Like that's one thing right there that will end up reflecting on its price, right? At least especially on Phantom, where the ecosystem is kind of smaller compared to Avalanche and Binance. But yeah, like that does matter, and it's definitely affected. So like using the token as a numeraire is huge. Secondly, we also drive the volume, which means we burn, we use the token in gas a lot. So like we are, when Pyreswap shows up on a chain, we are hooking up the validators, the people who are in fact, mining the blocks, as it were, or staking the blocks, however that works. Yeah. Validating the blocks, they're getting hooked up because the gas token they're getting in payment now has greater significance because now Pyreswap has moved in. So like this is by itself, this DApp can economically fulfill a chain's use case. And I think there are other dApps that can kind of do this as well, but I think we do ours a little bit better because we just have more going on in it. Like I think Ethereum, because it has so many things going on in it, it sort of has like its use case fulfilled. But I think a lot of chains don't. And this dApp by itself can do it because it has just so much going on in it. And that's just phase 1, because in phase 2, phase 3, phase 4, phase 5, there'll be even more going on. But yeah, it's meant to be like a real stabilizer and boon for the chain it's built on, 100%.
Awesome. Well, that's exciting stuff. Now, I always have to ask this question. How do you and the team at Pyreswap benefit from this? How do you guys make your money? What incentivizes you to build this? I know obviously you told us your origin story and your motivation here, but also
we're holding the tokens. Yeah,
we got to pay rent and eat food. How do you guys make? So how do you guys make money?
Well, I'm personally in like over 250 liquidity positions on Pyreswap. That's one, right? Yeah. On top of that, I hold a bunch of the tokens. Like I built this to prove that terminal utility could bring tomb forms back to peg. Do you think I wouldn't put my money where my mouth is? You know what I mean? Yeah. So like, how do I benefit from the launch of it? Like I'll be able to bring this stuff back to peg. From later on prints, we'll be able to continue deploying that liquidity, which is kind of like liquidity compounding liquidity. Does that make sense? And again, red candles don't kill any of this. So we're allowed to sell our holdings. Does that make sense?
Yeah.
Yeah. Like the team's allowed to sell, the investment's allowed to sell. Yeah, it's totally fine. Yeah. And in fact, there's always new tokens coming, right? So it's not like we have to sell and then buy in later. It's like we can sell and then just wait until there's more to sell. This works. Yeah.
Okay.
We've created reasons to buy the token. So if you can create reasons to buy the token, it becomes safer and safer to sell it because the product is not going to die from red candles.
Right.
Yeah, we're allowed to sell. Everyone's allowed to sell. Due to the nature and I guess the configuration of how we acquired it, like we're all working as volunteers now. In fact, a lot of us are probably in debt. So like,
I know you guys have been working on trying to save these old projects for years now.
Yeah, exactly. So like I fully believe that you should be allowed to sell what you buy, right? So the fact that, personally, Alex, I'll put it this way. I think there's more money to be made in fixing broken products than there is in launching new ones. Does that make sense?
Well,
So
yeah,
like,
I mean,
that's there.
there's so much value in community.
100%. Yeah.
That's,
If you don't have that, you don't have an economy, right?
you don't have anything. That's why people try to get on people's YouTube channels or in their Discord or Telegrams or their Twitter spaces, because building a community and a following is really hard. And and there's nothing tighter there's no community tighter than a community that got wrecked together.
Yeah, I noticed that. Yeah, for sure.
Yeah, those people are bound, they are bound
trauma
by war scars. Yeah, war stories. Like, oh, I remember when the dev rugged us. Oh, yeah, and I've made some of my best friends in communities where we got rugged in DeFi.
You know, it's funny you mentioned that, because will you go back to the strategy section of the documentation again?
Sure.
So if you go down to that right there,
Here.
so the status quo, like if you look right there, this image right here, when I talk about the status quo, I talk about like most of the projects in Web3. So effectively speaking, like you have the developers and the user base. And the thing is, if the developer doesn't understand that they appear to be on the other side of the fulcrum as a user base, they're going to end up in like a class struggle type of thing.
For sure. Sense? Absolutely. Yeah. That's why I always ask. I always ask them, how do you make money? Because it's different than how the users make money. And I want to see if their incentives align with the success of the project.
Great way to ask. So we in the GPSC, we literally divide our user base. So we have like 4 Discords, because the knights and the witches, they're not always going to be making money at the same time. Does that make sense? So the way that banking works in general, the way that banking works is you divide people up by time preference and risk appetite. Does that make sense? So this is actually the way that banks can be in the business of lending money and then still be profitable, right? Like they're effectively just always giving money away. They lose on some of these bets, but because they have a lower time preference, they're able to be profitable in the long run. Sometimes they're insolvent, right? Because if you had a business model where everybody just put their money and they weren't allowed to do anything, like how are they going to keep their lights on? Does that make sense?
Yeah.
So this right there, there's a lot of calculus involved in that. I'm not going to drone on and on about that, but we take a different approach. We don't consider ourselves the developers as much as we consider ourselves the producers. And the role we fulfill as the operator is the warranter, right? So I call myself the warranter down here at the bottom. And what that means is when you're the warranter, it means if something is broken, you're required to fix it. Does that make sense? Because I see devs not do that. You get what I'm saying? I think it's better to call yourself a warranter than a dev, because like the dev can quit whenever he fucking wants. The warranter can't quit. Does that make sense? The warranter is required to fix it. Does that make sense? Most of the time when something breaks, it's the money, isn't it? And then you better know a thing or two about banking if you're going to be the warranter, right? So user-based team A, user-based team B. This is an idea of the knights versus the witches. Effectively speaking, the witches are users that, by the way, any player, any investor can play both games if they want. I think that most players will either be like 80-20 or 20-80. If that makes sense. Like I think most of these will be kind of like that. And it'll be based on like how they like to play DeFi. Does that make sense? Like if they like to do short-term stuff on a day to try to like capture profit every day, the witch game will be very appealing to them. If they are long-term thinkers and they want to, do liquidity deployment and stuff like that, or they want to do boardroom staking and stuff like that, the night game will be more appealing. Witches can also be more individualistic, and knights have to use teamwork, if that makes sense.
Yeah.
And that's because the knights are effectively a credit association, so they have to take risks on each other. Does that make sense? It's a risk. Yep. Yeah, so we're a warranter, and the way that we balance that is the tokens for both teams are elastic. So whether you have, 50 on one side and 500 on the other, eventually the tokenomics will balance the ecosystem one way or another, right? So it self-corrects.
Yeah.
And this is another fulcrum on another scale right there. And by the way, that diagram, if you go to the concept page in the docs, this is actually, I'm very proud of my writing I did here. If you go to the concept, you'll see the thing called knights versus witches right there. It's in the section right there below, Knights versus Witches. So then we talk about this a lot, and we say, we agree community is definitely immensely powerful and valuable, but the fact of the matter is communities form because they're able to help each other solve each other's problems. Does that make sense? Yeah. So like communities dissipate real quick when they don't have anything in alignment anymore. And like communities will just, they just fracture real quick when there's nothing in alignment. There's no point to continue having a cadence if you need to have a reason to show up every day, if that makes sense. And I don't think a lot of projects in Web3 take like a very literate approach to how community is built. So communities, like you said before, when a community gets screwed over by a dev, they get very tight-knit sometimes. Well, we think the way to kind of create tight-knit communities is to probably just pit groups of investors against each other. Yeah. Like, you know what I mean? Like if you need to tribalistically have like an enemy, then like, why don't you just make that something that your economy can like deal with? You get what I'm saying? Like most projects, they collapse from this, which is kind of nonsensical because how are you going to balance your economy if everybody's in the same position? You know what I mean?
I often see communities and projects have a internal schism between certain user classes, like normal retail traders and the whales.
Yeah.
And I often see people being like, oh, let's get this whale out. And then the whales are just like silently doing their stuff usually. But there always seems to be that class warfare between the regular traders and the whales, and people are so scared that whales can destroy the project and this and that.
Yeah, exactly. Yeah. So we just designed to survive this. Yeah. Like it's just, it blows my mind the way that other products just die from like this. I don't know. Yeah. We just like, okay, so we'll just be a larger project that will have multiple communities inside it. And then that way everybody can have their own agenda and it's fine because red candles aren't going to kill us anyway. And it's because red candles can't kill us that people will keep coming back. If that makes sense.
So that's one of my risk questions. Can whales destroy the protocol, or as there built-in mechanisms to benefit from whale activity?
I mean, like a DEX benefits from whale deploying liquidity, but like, whatever. Yeah, come one, come all. Like my goal for Genesis is actually to teach 300 people how to active stake in the Incantation WitchVault. Like, so my metric of success is the fact that I invented a new paradigm, which is splitting staking into passive staking, which is regular staking, and then active staking, which is what we've introduced. I need to, in order to really, I think, like further the evolution of DeFi, like I need to get the idea of this into people's heads and not just a few. So like, I need to get it into like 300 people's heads. So during Genesis, it will be very, very popular because our Genesis contract is designed to make us popular. I need to leverage this popularity and turn it into education that I can shove down people's throats, which again, they'll be very susceptible to when they're, of course, making 9% daily yields in Genesis. If that makes sense. People learned how to use DEXs at one point. They learned how to use ToonForce at one point. They learned how to use Olympus DAO, right? Satoshi Nakamoto had to do like so much evangelism, you know what I mean? So I can't complain that I have to invent active staking, you know what I mean? But I'm ready to educate people because anybody can figure this out. Like just if you just watch me do it on screen share like 5 times, you will know, you'll understand the game. And it's again, if you only read it in documentation, it sounds so crazy, like you were saying before about going arcane and what that means. And going arcane is crazy, by the way. Like you talked about the
going arcane, and then a conclave is formed, and
the conclave. So the conclave,
the lingo, dude, I love it.
Right? Yeah, we leaned hard into the fantasy fiction, and the people who lock the WitchVault shut, they might end up getting like 1,000% yield on the epoch. Like it's so crazy what they can get from just like locking the door behind them, and this will cause like an absolute Black Friday type of behavior on the outside of the thing. That's my hypothesis. We haven't done this with hundreds of investors yet, right? We've done it in simulation, but like if the fact of the matter is that like a small group is able to control it, the rest of the community will be trying to crash that token as hard as they can, because crashing it is what unlocks the WitchVault. So we're quite fine with people crashing the shit out of these tokens if it helps them unlock utilities.
How would they crash it? Would they have to buy a bunch of like or one of these peg tokens?
Meed the peg coin over, get a bunch of Pyre fandom, and then sell the shit out of it. Yeah. Yeah. Yeah.
Yeah, that's interesting.
Yeah.
Okay. And then, you know, those who are sitting over there and in 2 Ohm or these other projects that are gonna be, well, I guess it's all part of the greater ecosystem. They're gonna be real happy about that, is the lever goes like, okay, now people are buying a bunch of 2 Ohm to crash Pyre to bring it back under TWAP.
And they sell it back for 2 Ohm. Yeah, so they can double pump themselves the peg.
And yeah.
Exactly. Yep. True story.
So my next question is, what do you think? I mean, this is right along the lines of what we're talking about here. You were saying the double pumping, like if you can time it right and play these right, obviously you can try to play both sides.
Yes.
What do you think is the best strategy overall, in your opinion, to make the most amount of money?
Oh, wow. That is such a good question. I would say that I think that like a user should learn about all 6 of them and then figure that out. I would say in the short term, participate in Genesis. I think Genesis will be an explosion of money.
Genesis is always easy money, dude. Absolutely.
Yeah. And ours is going to be the most lucrative Genesis ever, like by the math. I would say that the Incantation and WitchVault is something I'm very, very proud of, because it's really high real yield all the time, and it's also not boring, right? Like a lot of dexes are boring. This is not a boring dex, and red candles can't kill it. Generally speaking, like I think about like a lot of people, I think maybe other Web3 projects, they think of their investor or their user base as fungible people, but they're not. The users behind the wallets are not fungible with each other. So I think that like people with high time preference, they should learn the witch game, and they'll make a lot of money in the witch game. People with patience and low time preference and communication skills, they should learn the night game, because that is kind of how they can literally evolve into being a crypto banker. Yeah, and like I think the amount of money that the senior knights stand to make is insane. Let's put it that way. Fucking insane. In theory, if the knights get good enough at the game, they can bring share coin prices above 10,000, above 100,000. It's not going to happen in a fucking month, but like if they get good enough at banking, they can make as much money as they want. This is a real bank. Like, so if they just get good at managing risk and managing liquidity, you don't need, like I can't even describe it.
Dude, that's nuts. So you're basically
you're basically
saying
level
2 Ohm and 3 Ohm are back, baby.
Yep. Yeah.
And I was just talking with Dowking about this over the past few days as I've been preparing for this. I know he's really excited about this too. And we had some great conversations about the theory behind this and what it could actually do to these other protocols, where those share tokens could go astronomical again. And
well, okay, I think that seeing them go to 3-figure prices is very feasible during Genesis. I would think so.
It's really Genesis, man. Oh my.
Yeah. It's really hard to predict what it will end up being, because the equation has so many variables in it. But as far as getting share tokens up above 1,000 or 10,000, which would be again like the all-time high or Toon Finance or whatever, that will probably not happen in 2024. It could happen in 2025, but it will require the investors to get good at their job. And I mean that seriously. This is like the like validation of a blockchain. There's proof of work and there's proof of stake, right? And you get like rewarded for the work or the stake that you're putting in, right? This is like this as well, but it's almost like proof of risk. It's almost like a proof of risk system, or like a proof of skill, like a proof of management system. But this is all there. you prove the work you're doing and the amount that you're kind of. This is such a long conversation to like really go into the credit union stuff, but like there's no reason that like there's no cap to how good you can be at a banker. Does that make sense? And this is a new type of bank. And I mean, like, this is a new type of bank to the point that I'm a fucking historical figure for inventing, right? And
this is a historical AMA interview on the YaBonks show of
100%.
all places. I love it.
100%. But like, yeah, there really is theoretically no reason that like they can't bring it to a 6-figure price eventually. I will not say, like, you will not see a 6-figure share token in 2024. Just like right off the bat, you will not see it. Might not see it in 2025, but in 2026, you could see a 6-figure share token.
Dude, yeah, that would be insane. I mean, is that even, because, I mean, how is it, how's that possible?
The reason being is that the share tokens yield on the Toonfork website is shown as APR based on its expansion rate. And its expansion rate is a percentage of its total supply. So if 2 ohm and 3 ohm, for instance, keep getting printed, but they don't get meted, their total supply is continuing to increase. Does that make sense?
Yeah.
Now, if the total supply continues to increase and it's never getting turned into bad debt, that means that the yield on the share coin is continuing to go up and up and up. Does that make sense? And if the yield on the share coin is then going up and up and up, its monetary value will be perceived as higher and higher and higher. Does that make sense? Because like as long as that yield continues to be there, first of all, you don't need 100% of people to deploy liquidity. There's always a reason that some of it should be sold. Does that make sense? One, it provides transaction volume, and 2, there isn't any. You don't necessarily want like a chaos-free system, because like if it's too like peaceful, it kind of becomes pointless. Does that make sense?
Yeah.
Right. So it's not going to be like this really easy system where all the user base agrees to do the same thing at the same time. No, there's challenge to the night game, like there's challenge to the witch game, and the night game is learning how to use teamwork. The night game is really built similarly to around what I was doing in 2022 in the Seigniorage Circus, like as a consultancy group. So like I would use teamwork to bring like fucked up Toonforks back to peg. Does that make sense? So like if you can do that as well and then like keep it there, you can make a lot of money. I was making a lot of money from repegging a Toonfork. I was able to like 6x my money in like 3 days sometimes, right?
Wow. Yeah.
But like again, yeah, it's gonna be, it gets very difficult. It's meant to be difficult. But like in theory, once the bankers get good at being crypto bankers, they can, like bankers, create as much money as they want. Does that make sense? Because what banks do is they use like an underlying value and then they leverage that to create more instrument around it. Does that make sense?
That like derivatives. That's like the whole derivatives market is trillions and trillions of dollars.
100%. So
beyond
like
the actual money supply.
Yeah, exactly. So like literally similar that way, we are deriving instrument in the peg token. And like theoretically, there are scenarios where if the knights get organized enough, they can get so fucking rich, but it's a long game. It doesn't happen overnight. But like as far as like generational wealth actually being built in crypto, this product can do it.
Yeah. And I saw people make generational wealth in these Toonforks. I saw that. I saw that happen. What's that?
I said more than one generation, though. More than this one.
Oh, it was crazy. It was nuts.
Yeah.
I mean, some of my friends turned, like one friend, for instance, turned 26 grand into over 10 million. And I was just like, what? And I watched it. He would like show me his transactions out of the blockchain. I'm like, he's like, hey, you want to see me move out $1.5 million? I'm like, yes. And he's like, bloop. And I watched him put it into these like staking pools on these other projects I was covering and stuff. And I'm just like, dude, you're crazy. Like, what if you fat fingered that? And he gave me a heart attack, man.
Risk appetite.
But he's like, it's fine. I got plenty more. I got plenty more where that came from. He's like, I'm making 5 figures a day right now off this stuff. And I'm just like, what?
Yeah. There was a time when I was making like 7 grand a day.
Dude.
Yeah, not anymore, but there was a time.
Yeah. Yeah, it's amazing. And we're coming back into the crypto bull market, and DeFi follows shortly after, usually, like, because there's all this, everybody's all hyped about Bitcoin and Ethereum and all the DPIN stuff and the AI stuff and the GameFi stuff right now, all the infrastructure and technologies. But the DeFi dApps usually lag behind, but then there's like a DeFi dApp like bull market that follows, like we saw with these projects, and it lasted for a long time after the bull market. It lasted 8+ months. Yeah. And that's when I got into DeFi proper, if you will. I was always into Bitcoin and stuff for a long time, but that's when I got into like these tomb forks and then like the rebasing protocols, and I was making money hand over fist, just like, is this real? Is this real life right now? And that's when I started making videos about this stuff. And I'm like, guys, I'm making so much money. What's happening? And other people were making money with me. Obviously, I started learning about getting wrecked at the same time. And then I learned diversification strategies to protect myself and liquidity providing, becoming the bank and everything. And then I learned advanced seigniorage strategies. I learned how to play some of these tomb forks that lasted for a while in ways where you can play the boardroom and the share token. And you can, like, if you know something's going back up to peg because of the levers, I would buy it when it was so low, when TWAP was like 10 or 20 cents. And then I would ride that up to $1, and I'd 5x my money in a couple days, like you said.
Yep.
It's obviously a risky bet.
You bet it is.
It's a risky bet. Right. But I played that a few times. I didn't play with a ton of money, but like I made a few $1,000s doing that over a couple weeks, and it was awesome. So this is super exciting to me. Because there's inherent problems in these protocols with inflation. Yep. And there's no real utility.
Yeah, it's a mismanagement of debt. And it's just not understood to be that way. Because again, like I said, the two fork is the best surrogate to the two instrument system that is in fact natural banking, right? Like all one instrument banking is fiat and centralized. And a lot of that's not enough. That's just not enough. Let's put it that way. So like I'm definitely like pro multi-instrument projects, if that makes sense, because I think there's just more you can do with it. And it allows for there to be more kind of economic robustness, for lack of a better way to describe it.
Yes. Lack of economic robustness, lack of money education. And that's what we're all about out here, right? At least for me, I got into DeFi in terms of Bitcoin long ago because of the concept of sound money. Right.
Yep. Me too.
That's like my philosophy out here, is how to protect my wealth long term without being inflated to nothing through the Federal Reserve and all that stuff. So I was just like, hey, my dollars suck. Holding dollars is terrible over years. And nowadays, even holding anything that's not outpacing inflation, you're at a net loss, even though on paper most people can't tell. They don't understand. They're just like, why is everything more expensive and I'm making the same amount of money? But then crypto, it's like, well, my Bitcoin tripled over this last cycle. I'm doing fine. You know what I mean? People are catching up with that nowadays, but we're to like the next level where we're doing advanced banking strategies. I consider liquidity providing becoming the bank as an advanced banking strategy as an individual.
It is. And by the way, like modern banking, they're pretty new at it themselves. Like they've only started doing it since like 2009 or so. I have a book on liquidity management, but nobody else does. I have not met a single person in Web3 or even people who run a DEX. I'm pretty sure I'm the best like liquidity manager in all of DeFi, like better than Hayden Adams. Let's go say that right now, like founder of Uniswap. That's what I'm talking about. Because I have a book on it. Yeah, like, oh hey, here's a bunch of stuff about liquidity. When I see these other people, these other companies, these other groups, and they keep like building DEXs, the stuff that they keep correcting to is like, you have no idea what your job is. I just see that again and again and again. It's like, yeah, you do not think you're in the business of banking, and it just blows my mind. But yeah, no, you're completely correct. Like liquidity management is like, yeah, it's 100% a banker job.
Yeah. The liquidity, the liquidity technologies that I see coming out in these DEXs, we got Uniswap V2, Uniswap V3. By the way, what are your contracts using? Are they using Uniswap V2?
This is a V2, and I'll also speak on that. Pyreswap will probably never have concentrated liquidity. Okay. I'm not against it, but it doesn't really do anything for the DEX. Does that make sense? Like, this is a specialty DEX. There's a couple of things about Uni V2 that I think Hyde and Adams got super wrong. And one of these is a feature called sync. And one of the reasons this feature was installed is because apparently back in the day, people would be deploying liquidity like very, very deep, and somebody would be screwing it up and kind of like robbing them in the background. And I realized that it's because they were only deploying liquidity against a single pool. In my opinion, you don't want pilotage from a single instrument. Like, if there's multiple tokens you can deploy liquidity against, and it kind of makes sense to, they don't all need to be the same size, but you should have your token liquidity against a few different things. If you were to go look at the Forex market right now and go look at everything the Canadian dollar is against, it's against like 12 different things. Does that make sense? So only in like Web3 do people have this aversion to being in too many liquidity pools. All of like the big boy finance, they're in as much liquidity pools as they possibly can get.
That's how I am. I'm spread it out.
Yeah. I was the same way. I'm in over 200 pairs. I'm in over 200 pairs myself.
Wow. I'm not in that many, but that's wild.
But Pyreswap is a very, very intense liquidity graph. Let's put it that way. Secondly, a couple other things he got wrong was the way that LP tokens are quantified, right? So there's an equation XY equals K, which is a hyperbola. I first learned that equation in electrical engineering because volts times amps equals watts. Does that make sense? Yeah. So you learn about that when you have to use a different voltage outlet to plug in a dryer, right? You're like, oh, okay, this is done to keep the current lower, right? And you understand that if one goes up, the other one goes down. Most people don't understand this at all, right? So like watts, it always equals the product, but it can have variation in the two underlying factors. Well, the K value is not what the LP token quantity is. Does that make sense? The LP token,
it's not. Yeah.
Yeah. It's the LP token quantity should be the square root of the K value. That's what it should be. But here's the problem. The dev decided on Ethereum, because it was built on Ethereum, that they're going to err towards gas optimization. Does that make sense? And because they erred towards gas optimization, the LP token quantity, it doesn't update with every swap. It updates with every withdraw or deploy on that same pair from somebody else. Does that make sense? And it's sometimes also proportional to what your holdings are as a percentage of the total liquidity pool. Does that make sense? And for whatever reason, this has completely stunted. Like, looking at me now, like, they have now left billions of dollars on the table from making these decisions, like billions of dollars on the table, because liquidity derivatives are now things that we're going to build in Pyreswap phase 2 that are, these are financial instruments that are like literally like inner fucking galactic. It's going to boggle people's minds when we get into this advanced level stuff. Truly some witchcraft, if that makes sense. But because the LP token quantity, it doesn't update like a yield bearing equity would. Does that make sense? In regular finance, there are yield bearing assets that they accrue over time. Like, you hold it and it just trickles up over time, right? I'm not going to get into what it is, but LP tokens, like, they don't exactly work like that, even though they're collecting swap fees in the background. Does that make sense? Like, it's just not shown.
It's super confusing. Yeah, I've even read the smart contracts for these DEXs, and I've seen how they implement that equation and the square root and everything, and it just doesn't add up. the math doesn't like seem to work right. There's something messed up there.
It's screwed up, yeah. And it's like like them getting that math wrong. I'm serious. Billions of dollars have just like not been created, like due to just so much misunderstanding. I think also the boogeyman of impermanent loss. That was I don't know if you know this. That was theoretics created by a DEX that no longer exists. Does that make sense? So impermanent loss was invented by a DEX known as, I can never remember the name of it, Bancor, Bancor on that. And they don't even run a DEX anymore.
I've read about Bancor.
Yeah, because they fucking fail at their job. Does that make sense? So like, they're so bad, they invented impermanent loss, then they launched Bancor to offset impermanent loss, then they failed at running a DEX. People are still now parroting this left and right, not realizing the source of this theory came from. They were shitty at banking. Does that make sense? So like, you know what I mean? Like this is still like an impermanent loss. It's not a real loss. You understand what I'm saying? It's like an A to B scenario analysis. Does that make sense? It's not a real loss. You can still be profitable with changes in price, right? So it's like, oh, well, technically, had you remained illiquid, well, had they remained illiquid, the total amount of liquidity would have been different, and the total amount of price change would also have been different. Does that make sense? So it's not even like it's completely apples to oranges. Secondly, in real finance, where they use Greeks, impermanent loss would be called cross lambda coefficient or cross lambda loss. Like the guys that are coming up with financial theoretics are literally like not referencing finance for their theoretics. They're just like inventing it on the fly because they don't understand it. And they're like, oh, hey, watch out for impermanent loss. Then you know who spread the impermanent loss boogeyman around? All the centralized exchanges. You know why? Yeah. Because they realize that DEX is going to be a threat to their business model.
Interesting.
Now, why would a centralized exchange be like I'm not going to name them, but like if you go to centralized exchanges that have like an education section, you'll notice they have like a be careful about the risk of impermanent loss. Why would you, a exchange, be warning the user base about impermanent loss? Because apparently all you do is provide liquidity, right? I know maybe they have an order book or whatever, but at the same time, like, well, yeah, how do you deal with it, right? Do you get what I'm saying? Yeah, that's how I look at it.
Interesting. That's very educational.
Yeah, so like I literally have, another video another time, but I have like a list of grievances with what I think the ivory tower of DeFi thought leadership has produced in the last couple of years. And it's all trash. Like they get so much stuff wrong. It blows my mind.
We are in the infancy of this industry.
Yeah, and I'm apparently taking us to daycare. Okay, let's put it that way. Best economists of DeFi hands down.
And I'm here to document history. So that's very interesting that these ideas are being etched into my history book here on YouTube early on in the infancy of this industry. Maybe when I'm an old man, people will look back and be like, I remember when.
I'm going to get the Nobel Prize for this, Alex. I'm going to get the Nobel Prize.
Well, I hope you do. This has been super enlightening, and I'm sure it's been enlightening for our audience too. I mean, we've thoroughly covered, I think, my questions here. Like, I had 30 or 40 good questions thought up, and you satisfactorily covered everything I was going to ask you at this point.
Fantastic. Genesis, June 15th. Genesis, June 15th. Everybody come to Genesis, June 15th. You're gonna miss out if you don't come to Genesis on June 15th. Did we say that enough?
June 15th, Genesis Saturday. Event, you guys. And this is not financial advice. This is also not a forward-looking statement because I have no idea what's going to happen. I'm just some dude on YouTube. I'm a software engineer and an animal sanctuary owner. I'm not an economist, although this is what I do for fun for a long time. I love this stuff. And Genesis events are usually easy money. All right. So think about that. Hopefully you understand why that is after listening to this whole talk. You understand the incentives involved and what providing liquidity at the pivotal bootstrapping phase of a project or a DEX can yield in terms of rewards. So June 15th, you guys, Genesis for 90 days. I'm going to be all up in it, especially after everything we've talked about. I'll be throwing I'm going to be really diversifying into these Genesis farms, because with what you've told me about what could happen to 2 ohm, 3 ohm, to the share tokens of these protocols as well, I will probably grab some of those and make liquidity for that, plus some of these other tokens in the Genesis farms. And that way I have exposure to these assets, because if the theories here are correct, and the best case scenario happens where these other assets rise in price, then I can double dip. I'll be getting the yield from the Genesis farms in terms of the rewards, but I will also be getting the impermanent loss, or I'll make up another term, impermanent gain.
There you go.
From the rising appreciation of those sister projects in the greater Pyreswap ecosystem. And instead of maybe getting 3 or 4% to 9% per day, maybe I'll get that, and then my bags will also go up 50 to 100% in value too.
Quite.
So that's something you guys have to think about when you become the bank yourself and you're providing liquidity and you're trying to strategize what assets you're going to be providing liquidity for. And I come up with a thesis for each asset that I provide liquidity for. And I say, if I'm holding this, is it going to go up in value over the next 6 months? Say I want to farm this for 6 months, and my thesis is this is going to double in price in that time. Well, my bag's going to go up like 50% plus then, all other variables the same or whatever. That's a way that you can create value additionally that maybe isn't super apparent, but then you also have to watch out for impermanent loss if it goes the other way. So you have to know those risks as well, everybody. Now, read the documentation. Phithe, where can people find you, and where can people get information to learn more about this?
Okay, well, yeah, Pyreswap.com is a great place to start. Pyreswap.com. If they want to follow me on Twitter, it's 0x5, just like it says right here, right?
And for those listening, it's 0xPhithe.
Thank you. Yeah, literally that's my Twitter, or I guess it's called x.com. But Pyreswap.com is a good place to start. Pyreswap.com will bring you to Pyreswap's Twitter and Discord. And I am in Pyreswap's Discord every day, all the time. Like for Genesis, I'll probably be like living there, right? So yeah, they should definitely come to Discord. We have Telegram as well, but it's less populated. But yeah, Discord is a vibrant and excited community of people who are eager to watch DeFi evolve into something that is not embarrassing. Let's put it that way. And yeah, I would say Pyreswap.com and Pyreswap.finance is the DApp website. And if they go down to the footer links, there should be a bunch of stuff there. And they should, I think if they go to Pyreswap.com, they'll be able to eventually find me. All
right, you guys heard it here. Go to Pyreswap, Pyreswap.com, and go follow Phithe. Also on Discord and Twitter. Go check out the Pyreswap Discord community. All the links I will put in the description of this video. I will also make a channel for Pyreswap in the YaBonks Discord server. It's discord.gg/YaBonks. Link in the description and comments as well. And you can go in there, and it's a completely neutral, free-for-all forum. You guys can air your complaints or share your wins or talk smack, whatever you want to do in my server. It's fair game there. So that's it. Phithe, I want to thank you for taking so much time with me. I know we're probably approaching 3 hours just recording this, but we spent many hours preparing for this together.
Right.
And I think you've probably spent thousands of hours building this thing.
I don't want to answer that question. Yeah. You don't want to know what it took. Yeah. Well, it took everything. It took everything.
Well, I'm super impressed and excited. So I am going to be following this closely, and I will be putting my money where my mouth is, and I'll be taking part in the Genesis event in 2 days here. So hopefully this video, I can get it all out and edited in the next day or two and published. And we've got 90 days of Genesis, and then the rest of the games begin from there. So let's go, DeFi community and everybody who watched this far into the AMA. You're amazing. Thank you for your time and attention. Like the video, subscribe to the channel, leave a comment, and I'll see you guys all in the next one. Thank you, Phithe.